it goes into the bearish side again. So why it is happening, sir?
Okay. It sometime double time. I mean, it's not like one side manipulation and opposite it will go. Sometimes what happen is it will take upside as well as downside. First, it will take
Okay.
upside and it will come to downside and it will take downside manipulation. I mean, downside liquidity
So
also it will
how?
take. And it's
Okay.
second thing is we that's why we need to wait for the second manipulation to happen also. It will be happening in the ranging market, especially in the ranging market. Whenever we see the ranging market, right? So the first thing is market will go down and take the liquidity, and it will go up and take the liquidity to the upside also. Okay, both sides it will take, and after that it will create the breakup structure. So once it
Okay.
happens, we'll be taking entry. Okay, sometimes it will take downside liquidity, and after taking the downside, after taking the one side liquidity, it can be either upside or downside. Uh, After taking the liquidity, immediately it will break the structure. Immediately it
Correct.
will break the structure. In that case,
Correct. Correct.
you can have the clear bias, right? It may be bullish or it may be bearish according to the
So
according
on.
to where it is
Oh,
taking. Yeah.
okay. So only in ranging markets, sir, we need to wait, right, to manipulation to happen on both the side. But
Yeah.
if it's happening on only the one side, whether it's up or down, then it
Mhm.
will go in the opposite direction, right?
Right, right, right. So
Okay. So
it's
only in the ranging market, we need to wait for second manipulation
yes, if
to
you are
happen.
seeing it's a perfect ranging market, in that case you need to wait for the manipulation to happen. Either side.
Understood, sir.
Yeah,
Understood. Understood.
yeah,
Thank you, sir.
thank you. Okay. So yeah, let's see if anyone want to. Okay, gold 9th May candle, how we mark the imbalance daily. Let us check. 9th May candle gold. So just wait. Okay. 9th May gold. So quick question for you guys. We have some leftover yesterday, like the indicator based strategy. Today's session, shall we start with that indicator based strategy, or shall we start with the first thing and then we'll see the indicator based strategy? So that please confirm in the chat box.
Sir, Talib sir has said to unmute him.
Okay. Yeah, you can unmute.
So I am just giving him the permission before we
Yeah,
start the session.
yeah.
We'll wait like 5 more minutes so that rest of the people can also join.
Okay.
And
Okay. Am I audible?
sir, I have given you the permission.
Yeah, you're
Yes,
right.
yes. Okay, sir. So when manipulation happens, it
Mhm.
creates wick.
Mhm.
So should we mark that wick only or entire candle?
The thing is, it depends upon. Sometimes the manipulation candle will be like big candle, right?
Okay.
So in that case, you cannot mark entire big candle, but entire candle is a manipulation candle. Say, for example, here you can see this is a big red candle, right?
Yes.
So we cannot mark this entire wick, entire wick, wick
Candle.
or entire candle,
Mm.
right? In that case, you can take only the wick part or half of the candle, 50% of this candle you can take,
Okay.
right? But in my opinion, I'll be considering the entire candle. If if I see the manipulation here, I will consider entire candle as a manipulation candle. I don't take 50% like this or maybe
Okay.
50% like this. I will be considering entire candle because as I told you guys, we are not going to take direct trades. So
Yes.
we'll be considering this as a zone, and we'll be taking the advance based on the advanced price action. We'll be taking the trades. So
Okay.
there is no need to worry about that. So I mostly consider the entire candle. If you can see here, I will consider this entire candle, even though it's a big candle. It's a daily candle, right?
Mm.
Daily chart.
Yes.
Even though it's a very big candle, I will consider this entire candle as a manipulation candle. Now it's perfectly touched together. So that's why some people will consider like 50% of this candle. That also you can do, but sometimes you may not get the entry. So
Entry, yes. Price will not come in that area.
yeah, so it is wise to sometimes price will not even touch the manipulation candle. If you can see here, this is a manipulation candle here in a daily chart. Now you can see here it is not yet touched, not yet touched. So sometimes this may also happen. So sometimes market will purposefully avoid the manipulation candle. It will come back after some time, but definitely it will be tested, but may not be immediate, may not happen immediately. Sometimes it may take some time also. So yeah, so it is wise to capture entire, I mean, mark entire candle. It's a wise thing. I can tell you.
Okay. Thank you,
Yeah.
sir.
Thank you. Okay, 9th May. Let me see. 9th May. This is 9th May. How do I mark imbalance? Right. This is what Mr. Farooq is asking. Let me see. Yeah. Shobha, you can. Shobha, madam, you can speak with me. I think we will give the permission.
Hello.
Yeah, madam.
Sir, can you hear me as I'm traveling actually?
No,
Can you
I'm
hear my
hearing. I
voice?
can hear. Yeah, I can hear you.
Sir, just wanted to ask you, sir, whether the manipulation and the order block is one and the same, because I am getting slight confusing between this manipulation part and the order block.
Mhm.
Like when I am trying to mark the order block, I feel it is same as manipulation. So can you please explain it once?
In some cases, manipulation and order blocks are same.
How to differentiate between the two actually? Yeah.
The most of the times, see, order block is the last bullish candle or bearish candle before the uptrend or
Yeah,
downtrend,
understood.
right?
Yeah, understood.
Now, in this case,
Yes.
which one is your, for example, in this case, there is a breakout structure,
Yes.
and this is my order block, like last bearish candle. Now, you can see here,
Yeah, right.
this is also my manipulation candle,
Acha, okay.
right?
So I can consider that the same candle as a manipulation
Yes.
candle also.
But
Okay,
sometimes
okay.
you don't have this manipulation in the order block. Sometimes
That's
you will
right.
not see that.
Yeah. Not
Very,
always, yeah.
yeah, not always, but
Correct.
sometimes.
Yeah.
But in this case, you
Okay.
can see here, in this case, this entire candle is your order block as well as manipulation candle. This entire candle. But if you see
Okay.
based on order blocks logic, this is your last bearish candle.
Right.
So, but here the manipulation also there. So you need to consider order block along with the manipulation.
Okay.
So technically, this should be your order block as well as manipulation candle.
Acha, the
So
weak
yes,
part. Okay.
yeah. So in my opinion, order blocks and manipulation candle are same, one and same. But thing is, sometimes you may not get this manipulation in every order block. Not every order
Okay.
block is a manipulation candle. Not every order block is a
Okay.
manipulation candle, but every manipulation candle is order block.
Acha,
Okay.
not every order block is a manipulation.
Yeah, not every order block
manipulation is an
candle
order.
is the order block.
Okay.
Okay.
Okay. Okay.
So
Fine, sir. Okay.
yeah,
Thanks a lot. Yeah.
Thank you. Yeah.
So, but it will come only with really practice, because here actually, as a beginner, actually, I'm trying to understand the concepts, but really finding it little difficult. But I think so only this will surely work with practice only.
Yeah. When you have the proper
definitely, sir.
practice, it will be.
Yeah, sir. Definitely.
Yeah.
Yeah. And today's session is the last for this boot camp, sir.
No. Tomorrow also we are having session. One more session.
Okay, tomorrow we are.
Tomorrow also
But
we are
in
having.
case anything we are having any query after the bootcamp session, any queries can be posted on the WhatsApp group? Are we supposed to?
You can post in WhatsApp group, and you can send me the text message and a voice message also. And if
Okay,
required, we
fine.
will also connect one more time if required.
Okay, okay, sir. Fine.
Depends
Thanks a
upon
lot,
all
sir.
user
Yeah.
setups. Yeah. Thanks.
Okay, but thank you for your time, sir. Okay, thanks.
Yeah,
You can continue with the session.
Sure. And guys, do you guys find any disturbance in my display? I mean, screen. Is there any application is open? Because I'm seeing something, but I don't know what is there. I'm not sure. I don't know what is there. Is it still there? I don't know. Let me.
It's clear, sir. It's
It's
clear
clear
now.
name. Okay.
Hello.
One moment, guys. One moment. Yeah.
Yeah, sir, it's clear. So
Yeah.
around 40 people are here. So I think, sir, we can start with today's session. I'll just share one more message in the group. And yeah, I think we can start with today's strategy.
Sure. 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 So. Okay. Just give me a minute, guys. I'll just exit. I'll just exit and I'll join again. I'll join again. Okay. Please stay in the meeting. I'll exit and I'll join again.
Also, guys, one more thing. In case you feel you have any doubt, right, about the bootcamp, or in general, if you feel that you have any doubt, you can always ask me, right? You can always contact me. Yeah, Saikmar, sir, tomorrow we'll have the last session for the bootcamp. Tomorrow we'll have last session, and you can see the graduation day of our bootcamp. And so that's why I'm asking. If you have any doubts, you can contact me, or you can always contact Muthukannan, sir. So, sir, I hope permissions are like you can access all the permissions.
Okay. Yeah. I got it. Thanks, guys. Thanks, Akshat. Okay. I think we can proceed with further. Okay. Great. Let me share my screen once again. So I think we'll start with the today's topic. Then we'll move to the indicator-based strategies, because I think we are all fresh, right? So it is really I mean, if we start now, you can able to grasp the concepts. Then we'll move to the indicator-based strategy, right? So by the way, we can plan. Okay. Yeah, fresh mind. Yeah, that is the word I was thinking. Right. Okay. Thank you. Okay. So far we have learned about the market structures, right? The very second day in our bootcamp, we have learned about the market structures, and we have learned about the bias of the market, right? Sorry. If swing point structure is broken, if the structure is broken upside, then we'll be buying. If structure is broken to the downside, we'll be selling. And that is what we have learned. And after that, we have learned about supply and demand zones, and we have learned about so many patterns, right? And from the demand zone, we'll be buying, and supply zones will be selling. Rally based rally, drop based drop, those things we have learned. And after that, we have learned about the order blocks and the breaker blocks, and the mitigation blocks, and those, and how the why the order blocks are working, and why market is retracing, and who is buying, who is making, where who is making buying, and those things and all we have discussed. And in yesterday class, we have discussed about the imbalance concept, why imbalance is happening, how we can utilize the imbalance in our day-to-day trading, and what is the significance of imbalance, and uh, how the markets moves, how the markets are filling the imbalances, converting the imbalance into balance. So those things we have seen, and we have also seen the very important topic of yesterday was the liquidity concepts, and what is liquidity, and where liquidity is residing, what is liquidity pool. Liquidity pool is nothing but it's a place where liquidity is residing. So we have seen that, and I said to you guys that every single candle's highs and lows has the liquidity, and also every swing point has the liquidity, and every equal highs, or maybe double top, triple top, double bottom, triple bottom, these have the liquidity. These has the liquidities. And also we have discussed that like what else we have discussed? Every daily candle, every weekly candle, every monthly candles, highs and lows also has a liquidity, like that we have discussed. And basically, what is liquidity? Liquidity, it is nothing but the orders which is presented in the market, especially the stop loss orders, especially the buy orders, sell orders. Those who are not placing the stop loss, also we can call that as also liquidity, right? So that we have learned, and we have seen the practical examples of liquidity grabbing, how market is functioning. Market is functioning based on liquidity seeking approach. Wherever the liquidity is there, where market used to go. So that is what we have discussed. So market is seeking, basically seeking the liquidity, right? That is we have learned, and we have seen few chart examples that first the manipulation will be happening below the equal lows, or below the range, or above the range, or above the equal highs, or maybe below and above the candles highs and lows, right? Where the price will be going down or going up, and immediately it will go to other side, opposite side, right? It will go down first and it will go upside also, or maybe it will go up and take the liquidity and it will go down, like that we have seen. And we have also identified those candles, and we have taken the we have back tested with the entry opportunities with that particular areas, right? So this is what basically we have seen so far. Now there will be a lot of question for you guys after learning all these concepts, right? One of them is, still you are not convinced about the taking orders, right? I don't know where exactly I have to place orders, and where exactly I have to place my stop loss. And how do I know whether my supply zone or demand zone or even a manipulation candle, whether my manipulation candle is gonna work or not? I don't know that. And whether my zone's gonna work or not, I don't know that. Should I take 50% entry? Should I take 100% entry? Should I wait for should I directly take entry based on some indicators? So there are a lot of questions are there, right? So we'll be trying to give the answer for all the questions you are having, especially taking entry part. But before we continue that, we will be learning the multi-time frame analysis. Now, there is a two different approaches there. One is top-down analysis. People used to say it's a top-down analysis, or it's called as a multi-time frame analysis. In my opinion, top-down analysis and the multi-time frame analysis are one and same. So why multi-time frame analysis are required? First of all, the thing is, anybody can tell me what is multi-time frame analysis? Anyone have any idea? Anyone have any idea about multi-time frame analysis? Multi-time frame analysis. Okay, no problem. It's like, yeah, great, top to bottom, reversals, lower time frames, right? I can tell you that we'll be working with different time frames. We'll be seeing the charts in a different time frames, different time frames, and we'll be making decisions. So most of the people's, those who are starting with the markets, any markets, will be confusing with this multi-time frame analysis, because this is the one tricky part. People will get confused easily. I'll give you a small example. Let me share my screen. Okay. Now, this is the gold chart, right? Gold chart. You can see here the time frames here in the top: 1 minute, 3 minutes, 5 minutes, 15 minutes, 30 minutes, 1 hour, 2 hour, right? 4 hour, even in the month also there. You can choose month also. Okay. Now I have selected the daily. Now just watch this chart in a daily, right? Anyone tell me what is the market bias here? Bullish or bearish? Anyone tell me? Bearish, okay. Bearish, bullish, okay. Right. It maybe it given the breakup structure. That's why I was saying bullish, right? Breakup structure, and it was trying to go up also, but here it is taken the liquidity, right? Maybe it, okay. You are having some stand, right? It's like a bearish, or maybe it's a bullish. It is bearish, but here it was trying to go up, or you can say here it is kind of ranging, right? It was trying to go. In a long term, bias was bearish, right? It was bearish, but recently it broken the structures, and it may be trying to go up like this also. It can go up. It may happen, right? But let's stick with this. It's a bearish market. Okay, as of now, it's a bearish market. Now, I'm seeing this in a daily time frame, right? Now, let us go to the 1 hour time frame. Now, can you guys tell me what is the bias? Bearish market or bullish market? This is. Anyone tell me? Is it bullish or bearish? Bullish, right? Because it's broken the structure clearly. It is still bullish, right? Those who said bearish, what you guys feeling now? Is it bearish or bullish? Those who said bearish in a daily time frame, now you are seeing it's a bullish market, right? Okay. Now let us go. Let us delete here everything. Let's go to 5 minutes time frame. Now what are you guys seeing? Can you tell me what are you guys seeing? Bullish or bearish? Now, what is this, guys? You are saying bearish, bullish, bearish. What is the exact trend now? Okay, sideway. new concept, choppy, right? Now I'm talking about the overall. It is bearish still, right? But you said in 1 hour it is bullish. Daily it is bearish. Now which time, which one should I follow? Okay, which one I should I follow? Let us go to 1 minute. Let us go to 1 minute. Now tell me, guys, what you are feeling. 1 minute. Now it is bullish or bearish in 1 minute? Bullish. Now some of you guys said it is choppy market. Now how are you saying it is a bullish? You said choppy market, right? Now which one should I follow? Okay. Now tell me, guys, should I buy here in this order block? This is my order block, right? This is my order block. Should I buy here? If it is a bullish market, I'll be buying, right? But in 5 minutes, I'm seeing some sort of bearish market only, right? It is bearish. Maybe here I can say some breakup structure, right? 3 minutes, let's go 3 minutes. 3 minutes, it's bullish. 5 minutes, 30 minutes, bearish only, no? Right? So now it is confusing, right? Is it confusing or not? It is clear. I want answer from you guys. Confusing, right? Yeah, it's confusing. That's why I have uh, I have developed my own what do you call it? understanding about time. Now, time is equal to illusion. Sorry about the spelling. Time is illusion. Time is not the what do you call it? It is illusion, guys, because you are people are from you guys are what is your time? Can you guys tell me what is as per your watch, as per your mobile phone, what is the time now? What's the time now? 7:21. For me, it's a 7:21. Okay, Syed saying it is 5:51 in Dubai, right? In my mobile, it is showing 7:21, right? We are in India, right? But Syed saying, Arshad saying is from I think he's from Dubai, and he's saying it's 5:30, 5:51, right? Now, why this is changing? Because of the place we are living, right? Because of the place we are living. If we go to or Mars or space, time will be definitely different, right? So can we conclude that time is illusion? Time is illusion. Time is not fixed one. It will be changing. Yeah. I'm not a physics guy. I don't know the physics, science, and all. If anybody having the experience in the physics, theory of relativity, Einstein's theory of relativities, and you might have known that. But time is kind of illusion. Time will be changing, right? Okay. So the thing is, in the markets also, whatever you are saying seeing in the different time frames, different time frame chart is changing. You can see here, I have taken weekly time frame here. Here it is look like something like bullish and ranging market, right? If I go to daily, it is like a bullish market. Now it is become bearish market. If I go to 4 hour, it will be something different, bearish market. If I go to 1 hour, it will give bullish market. So time will be according to the time, the chart is showing the price action differently. Okay, according to the time, please note this point. According to the time, chart is showing the price action in a differently. So whenever you see the charts in a different time frames, you should know one thing, that price is fractal. Price is fractal, which means price is changing uniformly according I mean it will be changing uniformly across all time frames. So if market wanna go down, it will be happening in 1 minute, 5 minute, 3 minute, 1 hour, 1 day also, 1 day candles also. Okay, price is fractal, which means price is constantly changing. I mean, I can tell you that price is uniformly changing across all time frame. How can I explain this? Right, let's take one chart, BTC USD. I think today market is there, BTC USD. Okay, let me go to 1 minute time frame. Now 1 minute time frame, what was the last candle? Bearish candle, right? It's somewhere bearish candle. I think it's bearish candle, which means market is falling. Market is falling. You can see the down movement here. Market will be changing. It will be falling, right? If you go to 3 minutes, the same fall happens here also. If you go to 1 hour, the same fall happens here also. If you go to daily, the same fall which is happening in the 1 minute will be happening here also. Okay, it is not like you for your country different time, my country is different time. It is not like that, right? So every country, I mean, there will be a difference in time, but people still eat, sleep, right, and do their work. So it is not changing. It is going on. Similarly, the price will be changing across all time frame. If it is goes down in one time frame, other time frame also it will be going down. If it is goes up in one time frame, other time frame also it will be going up. Okay. So what you need to understand here is only the chart patterns, the candlestick charts are changing according to the time, according to the time. It is showing the price action according to the time's perspective, which means time is not influencing anything here. Time is not influencing anything. Time is keep on changing. Even today's Forex market is closed, right? But still time is going on, right? Market is closed, but still time is running. Time is running. Whether market is there or not, time is pass, right? But price will be goes up or goes down according to the our supply and demand concepts, according to the smart money's intervention, according to the other factors like imbalance and those things and all, right? Time is price will not seek the liquidity based on time. Price will not create the order block based on time. Okay, time you have to separate the time from the price. Time is not doing anything. Okay, so the thing is you should know is whenever see the markets in a different time frames, you need to keep that in mind that price is fractal, which means price is changing uniformly irrespective of what time frame you are watching. Irrespective of what time frame you are watching, price will be changing uniformly. Okay, now I have one question for you guys. So when you see the markets, for example, now you are in a daily chart. What you're seeing is a bearish candle, right? The last candle was bearish. Just go to 1 minute chart. What was the last candle? Bearish. It is still bearish, which means now if tomorrow's market opens, if market creates one more bearish candle like this, right? This changes will also reflect in 3 minutes. This changes will also reflect in 5 minutes, 1 minute, 1 hour, 2 hour, in 4 hour also. But the reflection will happen immediately in 1 minute. Everyone agree with me? But this small changes will not immediately reflected in the weekly chart. In the weekly chart, you cannot see that changes. You can see the changes in a 1 minute chart immediately, right? Thank you guys. Right? So just keep it that in your mind. Okay, just keep it that in your mind, because that will be helpful for our next topic. Okay, cool. Let me share the presentation once again. So now what we are going to do here is we are going to do multi-time frame analysis. So what is multi-time frame analysis? Multi-time frame analysis involves monitoring the currency pair in a different time frames. In general, we will be using at least 3 different time frames. 3 different time frames. Okay, to read the markets. To read the market, you will be using at least 3 different time frames. In my opinion, at least you need to use 2 different time frames. I'll be using only 2 time frames. Okay. Trend is your friend. When the price movement is harmony with every time frame you are watching. Okay. When the price movement is harmony with every time frame you are watching, trader can able to take high probable buy or sell entries. Okay. For example, you are seeing bearish market in bearish candle in 1 hour time frame, and you are seeing bearish candle in a 15 minutes time frame, and you are seeing bearish candle in the 5 minute time frame. In that case, you are traveling with trend. So in that case, you can take high probable trades. Okay, so we'll be seeing the candle movement. I mean, the candle movements are same in all time frames. If it is same in all time frames, we can take buy or sell entries based on that, right? So technically, most of the time that won't be happening, but still, we'll be using different techniques to identify that, and different techniques to enter the market. Okay, so we'll be using 3 different time frames generally: higher time frame, medium time frame or medium term time frame, lower time frame. Okay, so here it is shuffled. So technically, higher time frame first, lower time frame, medium time frame second, and lower time frame third. So apologies for this. This is medium term MTF. Okay, MTF, and this one is LTF. So it was a typo error. Okay, so strike this. Okay, now my higher time frame is monthly. If my I can use these as a higher time frame. You can use monthly chart as a higher time frame, weekly chart as a higher time frame, daily chart as a higher time frame, H4 as a higher time frame, H1 also as a higher time frame. And some cases you can use M15 also as a higher time frame. But I don't prefer this. I don't prefer this as a higher time frame. I don't do this. I prefer these 3. These 3s are my higher time frame because I am a day trader. So that's the reason I don't use this one or this one. So you should choose either of these 3 You can see the market in daily or H4 or H1. Either one of these you need to choose. If you choose daily, your medium time frame is H4 and your entry time frame, buy or sell entry, so that should be H1, right? If you're choosing H4, then your entry should be in M15. If you are choosing H1, then your entry should be in M5. So I personally use this one and this one. Sometimes this I'll be using, sometimes I'll be using this one. Okay, let me clear everything. So you guys can note this down and you can use either of these 3 So I personally use for a bank nifty and stocks. I use this. Like I'll be comparing all these 3 time frames. Like I'll be watching charts in daily first, and I will directly take entry in M15 or M5. I'll be doing that also sometimes. Sometimes I'll be watching the charts in daily, and I'll be directly take entry in M15. So it's up to you guys how you are practicing. That is also key. So, and it depends upon the markets also. But in Forex market, I use the daily time frame for liquidity grabbing. I'll be using that. And after that, I'll be marking order blocks or manipulation candle. And I'll straight away go to M5. I'll see the daily chart and straight away go to M5. Sometimes I'll see the H4 chart and I'll go to M5. I see the H1 chart and I'll go to M5. My entries, my other confirmation, everything is under M5. So this is sometimes risky also, but since I have a habit, since I have practiced like this, so I'm comfortable with this. I'll take higher time frame either one of these, but my next time frame will be M5. Directly I'll be going to M5. I don't see these. In very rare case, I don't have the confidence in the setup. In that case, I'll be seeing this time frames also. So a trader should use at least 3 time frame. At least 3 time frame you need to use. So it can be H1, M15 and M5, or it can be H4, H1, M15. So if you are a day trader, I suggest you can use these 3 time frames. Okay. Now we'll be seeing how we will be using these time frames. Right. So this is a comparison I have told you guys. Now you can see here H4 chart here. This is my H4 chart, and let me move this H4 chart and H1 chart and M15 chart. Now you can see in H4 chart, I'm seeing the bullish candle, right? And H1 chart, I'm seeing the bearish candle. And M15 chart, I'm seeing bearish candle. So I need to see these three to be same. Only then I'll be taking my buy or sell entry. Okay. So we'll be understanding the markets in a different time frames. And different time, we will be comparing the different time frames and we'll be taking the decision. Okay. Now, so let me go to the next important topic. We'll be seeing this in a chart real quick. There's a topic called order flow. Order flow. Now, what is order flow? Order flow is this term. You can call this as a market structure also, but order flow is something different. Where exactly order is flowing, where exactly money is flowing. So that we are gonna find in the market. That we are gonna understand in the market. Now, what is order flow? Where is market going? Where is exactly market is going? Market moves to the direction of where the liquidity resides. Every time market moves upside or bullish, then its low become protected. Just note this point. Every time market goes up and its lows become protected and it holds the liquidity in it. Similarly, when markets move downside or bearish market, then highs become protected and it holds liquidity on it. Okay, the movement of market is completely depends upon where is the liquidity is residing, where is the order is there. So the price will be flowing through the orders. It's called as order flow. Okay, now the why we have yesterday itself we have discussed, right? Where is market going? Why is market going up? Because it wanna go down, that's why it's going up. Why is market going down? Because it wanna go up. Why market buys? Because you wanna sell. Why market sells? Because you wanna buy. So the same thing here. Here every time market goes up, it will be taking liquidity from the upsides. It will taking the liquidity from the upsides. Okay, but every time it will be goes down, it will be taking liquidity to the downside. Now, why it is important? Why it is important? See, before you do multi-time frame analysis, you should always take the higher time frame bias. You should always have the higher time frame bias. I told you that you can use either of 3 time frames, right? In this 3 time frame, you should see the market bias. You should see the order flow, how market is flowing. That you should see first, right? So whether market is bullish or bearish in a higher time frame perspective, that you need to see first. Only then you can able to take trades. You can able to create the buyer your own bias, right? Now there is one more concept which I think I have told you guys, but I haven't explained. Last point of mitigation. There is a term called last point of mitigation. We'll be explaining what is order flow. We'll be explaining what is last point of mitigation. The last point of mitigation is nothing but every time price mitigates the order block. It is understandable that price is clearing the liquidity and creates new liquidity point. The new liquidity point is called as last point of mitigation. For example, if you can see here, this is my order block, right? The first one is my order block, and or it may be the manipulation candle. There will be manipulation candle. That's why we have marked this manipulation candle. Now, what happened? Price just fell down, and it is mitigated this order block. Now you can safely say there is no liquidity left here. The liquidity is grabbed. There is no interest. You may say that there is no interest in this block. Now after that, what happened? Price just fell down, gone up, fell down. Now it is created one more order block here, but this is not yet touched, right? Price is falling down, and this is also not touched. Right? So now if you're seeing market from here, if you're seeing market from here, if you're looking for buying opportunity from here, okay, then technically what should be your target? This should be your target. This last point of mitigation should be your target. Technically, at whatever time frame you're seeing, if you're buying from the bottom or buying from this order block, maybe from this order block or this order block, maybe if order block is there here, if you're buying from this order block, what should be your target? The last point of mitigation, because this point is not yet mitigated, and this also not yet mitigated, but here it is mitigated. Here it is mitigated, right? But price is going. While going, it create the order blocks here, and this order block is not mitigated. This is not mitigated. This is not mitigated. Right now, this is mitigated. This last point of mitigation is mitigated. Now, market created the new last point of mitigation. Now, this is my last point of mitigation. Similarly, here in the bottom, this is my last point of mitigation. If I am selling from here, my target should be this, at least this point, this block. Okay. So this is what we are calling as the last point of mitigation. For example, this is my order block and it is mitigated. Right now, I don't have any interest on this. Now, after the new order block is created, and after the price fell down, and it created one more new order block here, fell down. Now I'm looking for, I'm having some buying order block here. I bought from here. If I'm buying from here, my target should be at least this one or this one, because these are not mitigated order block. Okay. Once this is mitigated, this is no longer valid. Once this is touched, mitigator is nothing but it is touching, right? This is no longer valid. After that, it create new order block here, right? Now price is falling down. While falling down, it is mitigating the unmitigated order blocks. This is cleared now. This is cleared here. This is cleared now. Now, if it is buying from here again, then this should be your target. Okay. So we'll be seeing this in a different time frames, especially in the higher time frame. We'll be seeing, especially in the higher time frame, we'll be seeing this last point of mitigation, because in higher time frame you will be seeing the high probable trades. Okay, let me delete everything and let me move forward. Let me see. Okay, these are the concepts. We are not going to, we need to understand these concepts, right? So now finding directional bias of the market. Now we have discussed this in our first market structure class itself, right? Finding the directional bias. How do I find? But now we'll be incorporating the liquidity concepts also here. Okay. Earlier we have discussed purely based on the market structures. Now we'll be including the order flows and we'll be including the liquidity, and now we'll be finding the directional bias of the market. What is my direction? Whether market is going up or going down? How do I know that? For that, one quick hack I can tell you guys, that stick with your higher time frame. Now someone is asking in the group, which time frame is the best? Someone is asked, I think in a group. I can tell you that no time frame is best. No time frame is best, because I told you guys, time is an illusion. Okay, so we are not trading based on the time frames. We are just trading based on the volume and price action which is happened within the time frame. Okay, so time frame is not key here. The price and volume, and price and the movement, volume also secondary thing. The price action happened within certain period. So there is a difference between time frame and price action. Time will be changing, even though market is there or not. Time will be passing, it will be changing, and it will create illusions, right? But price is changing according to the smart money, according to the supply and demand, right? So Now we are going to understand how much price action happened within certain time frame, right? Especially in a higher time frame. We are not going to choose time frame and then we are not going to mix up this time frame is based this, not like that. We are going to identify what has happened within that particular 1 hour candle, within that particular H4 candle. Okay, it's all about price. Now, there will be 3 terms people used to say: price, volume, time. Price, volume, time. Now, if you take any indicators, any indicator based strategy, it will be consist of either price, volume, and time. If you take EMA, exponential moving average, you'll be taking 20 period moving average. Last 20 period candles will be calculated, right? If you take MACD, there will be EMA will be there. If you take RSI, there will be certain period will be there, 14 period RSI, right? If you take any other indicator, it will be there. Time will be part of the indicator. Okay, it doesn't mean that time gonna determine everything. Time is an illusion. Anybody heard about the Renko charts? Anybody heard about the Renko charts? There is a charting platform similar to candlesticks. We are having Renko chart. Yes, Renko chart. You don't need to worry about that because I don't know. I don't know how to use the Renko chart personally. Renko chart will not show the times. It is there in a trading view platform. You can see. Let me share. But I haven't personally used. If you go to the, you can see the trading view candlesticks there, right? Candles. Just click this button. You will be seeing different candlesticks pattern. You can see here Renko. If you choose Renko, it will be clearing the noise of Japanese candlesticks. It will be saying like this, right? You can see here. Do you see the charts differently here? It's like green candles, continuous green candle, red candle. It is not a candle actually. It is a, people say this is a Renko chart. If you have, if anybody teaches this, just learn. Okay, so I don't know how to use this, or you may Google it and know. It will be simply showing that these boxes are only showing the price movements. It is not like at this particular time, so I cannot clearly explain this because I don't have any experience with this. So this is different platform. This is different charting platform, and which completely differ from the candlesticks. Okay, so honestly I don't know how it works. So you can Google it and you can get the difference between candlesticks and Renko. Okay, so that is your task. If you want to know more about this, you can do that, right? So one thing I can say, this is completely different from candlesticks, and it won't be changing the based on time. It will be changing based on price movements. If price moves certain points, like 5 points or 10 points, only then new Renko box will be plotted. Okay, only then new Renko chart will be plotted. For example, here you can see green candle, continuous green candles, right? Now you can see this green candle, green box is plotted. And after that, you are seeing this green box. Then what you can understand is, what is the difference between these two? If price moves certain points above, only then the second will be plotted. If price moves certain points above, only then third one will be plotted. Like that it will be there. So I think people having understanding in this, people are using this. So I'm not using this. I think people used to say it is easy and understandable. So you can try this also. Okay, but don't ask me whether smart money concept will work here or not, because I don't have any experience in this. Okay, so yeah, great. Now let's move to the today's topic. Okay, so let me share. So we are going to finding the directional bias of the market. Now just note this point. Just note this point. The heading: structure is everything. Structure is everything. Structures mean price. Price is everything, guys. Price is everything. it is important to know that market structure plays key role in determining the order flow, especially in higher time frame. Every time structural points are broken, market tends to go that direction. Trader need to mark the break of market structure in the chart, especially in the higher time frame, at least in a H4 chart. Okay. When high is broken, trader should expect the buying currency pair. When low is broken, trader should expect the selling currency pair, right? In a bull market, if price breaks the lows, in a bull market, if price breaks the higher time frame low, then possibly trader can expect the bearish trend. Similarly, in a bear market, if price breaks the high, then possibly you can expect the bullish trend. Okay. So just note this. Above these 4 points is applicable for every single time frame. Every single time frame. Okay. However, we are going to use this only for higher time frame, only for identifying the direction of the market. Okay. Why we are using this in a higher time frame? To identify the direction of the market. We are going to identify the direction of the market based on the market structure, break of market structures, right? So we have discussed this in a previous sessions also, but now let's see here. Now everyone will be agreeing that it's a break of structure. It's a break of structure, and yeah, right. Now this is my bullish order block, right? Now every time structure is broken, upside broken. Now what you can say here is the low is protected, right? I told you guys that there is a liquidity here. There is a liquidity here also, right? Everywhere liquidity is there, right? But only the upside liquidity is taken. This liquidity is taken by this candle. This liquidity taken by these candles, right? But these lows is protected. These lows is protected. These lows is also protected. Lows are protected, which means lows has the liquidity points. Highs are broken, which means liquidity is cleared. Above this high, wherever the selling order, sell orders there, all are cleared. Okay, so there is no orders left here, but orders there in the bottom. Orders there in the bottom. Orders there in the bottom. Especially inside this bullish order block and below the bullish order block also. Okay, here also there. Here also there. Orders are there below the bullish order block also, right? So this is what we are calling this order flow. Now, where is order flowing? Order is flowing upside. Why I'm saying order? The market is clearing the upside liquidities. Now, what we call this as a buy side liquidities, right? BSL. Yesterday we have learned, right? BSLs. Because here people will be selling, so their stop loss would be buy order, right? So upside you are having BSLs. All BSLs are captured. All BSL by BSL is nothing but buy side liquidity. Buy side liquidity. Okay. All buy side liquidities are cleared, and order is flowing upside. Order market is going upside and it's clearing the liquidity. Why it is going upside? To take the liquidity and come down. Okay, you need to remember this. Take the liquidity and come down, right? So this and all we have discussed yesterday, right? Now let me share the chart quickly. Now first things first. I'll be doing that. I'll be taking my chart either daily time frame or H4 or H1. You can use 3 hour, 2 hour also, but it's up to you. But my personal preference is H4 or H1. Okay, I'll be taking H4. Okay, now what is my bias? In H4, what is my bias? I'll try to identify my bias. Now, what is happening here in recently? I can say this is a breakup structure, right? I can also say there's a breakup structure here, and there is a breakup structure here, right? But what happened recently? What happened very recently? What happened? breakup structure to the upside, right? It's broken. I'm not sure whether it is it's a breakup structure or it's a liquidity grabbing. Not yet. I'm not sure, right? So it is broken to the upside, and it is falling down, right? Now, what is my bias? Since it's broke the highs, my bias is only buy. I'll be buying. From where I'll be buying? From the order blocks. This might be my order block. This entire candle might be order block, but I cannot afford this. So I'll be taking 50% of this candle. Or maybe I'm having the imbalance here. I'm having imbalance here. So, and I can take this entire as order block. So I can expect buy from the imbalance area, right? Now, this is my bias, guys. This is my bias. Okay. Now, I have sticked with my bias that my market is bullish in H4. Now, I don't care whatever happens in 1 minute, 5 minutes, 15 minutes. It doesn't matter. It does not going to affect me. It's not going to affect me. My market is bullish market. Okay. So you should not care about whatever happening in 15 minutes, whatever happening in 1 minute, 3 minutes, because your higher time frame, what is saying? It is a bullish market. From where you will be buying? You will be buying either these two levels, right? So you will be buying. Okay. Now, if you are buying, if it is a bullish market, now the liquidity is grabbed here, right? Upside liquidities are grabbing. The upside liquidity is grabbed here. It is grabbed here, right? Now, tell me one thing. As soon as the liquidity grabs happened, price may react to the downside also. So that is the reason that this down movement is happening. Okay, that is the reason down movement. It is taken the liquidity. It broke the structure also, taken the liquidity. So I can expect from here to buy entry. From here, I'll be taking buy entry. Okay. Next, where it will be going? It will be going to either this high because it has liquidity now, or this high because it has the liquidity. Correct? So my target should be either this or this, because this is my last point of mitigation, or this is my last point of mitigation. Okay. So now what is my bias? My bias is bullish. So I will be buying only from this zone. I'll be buying only from this zone. I'm going to buy only. My market bias is buy as per my higher time frame, H4 and H4 time frame. I am going to buy. Okay. Now, but market is falling, right? Market is falling. It is going down. Should I able to capture this up movement, down movement? Yes, you can capture this down movement. You can sell. You can look for the opportunity, because you are definitely know that market broken the structure. It come down here, and from here it will be reacting. So it has to come down. It has to come down. So it has to come down means I can take sell entry from here, maybe here, maybe here. I can capture this down movement, right? And after that, I can look for the confirmation inside here. From there, I can buy also. From there, I can buy also. Right? Whether it's gonna work or not, that is second thing. That is second thing. But as of now, what is my bias? My bias is buys, and I will be looking for. I'll be looking for sell now, and once price reaches my bullish order block or imbalance zone, from there I'll be looking for the buying opportunity. Okay, everyone clear with this? Everyone clear with this? So whenever you see the chart, just see the breakup, mark the breakup structures, right? Okay, breakup structure happened. Now where should I I have to buy? I'll be buying from this candle, or maybe this imbalance zone. Especially it's a higher time frame. So from this imbalance zones, I'll be buying for, right? So that is my bias. But I know that market has to come down and touch here. Only then I can buy, right? So what I'll be doing is I'll be taking sell entry from here first, somewhere here from, and I'll take sell entry from here. And as price as soon as reached here, I'll be closing my sell position Here I'll be closing my sell position. From here I'll be looking for confirmation and I'll be buying. I'll be buying from here and I'll be targeting either this high or this high. Okay, so you don't need to confuse because market has only two options. Either you have to buy or you have to sell, right? In any given market, any given point of market. Okay, let me see. Okay, great. Price is ultimate, guys. Price is supreme, ultimate and supreme. Now let's go to the presentation. Now identifying the high probable trades. High probable trades. Now yesterday itself we have discussed that we'll be marking daily highs and daily candles high. Price will go above the daily candles high. From there, if it is taken the liquidity, then I told you guys that it will be high probable trades, right? So whenever it goes above daily candles, weekly candles, monthly candles highs, you can get the high probable trades. But yes, but we will be, how do I exactly take the entry? How do I exactly take the entry? That is the question, right? So for that, these are the things. First of all, you need to know high probable setup is require the following criteria. The first thing is trader should know the directional bias of the market. Okay. Now I told you guys how to identify the directional bias, right? I hope everyone clear with this, right? You should take higher time frame, any one of the higher time frame, and you should know the directional bias. Now this market is bullish market. Okay. Second thing is trader need to identify the liquidity pools where possibly the stop hunt can happen. Where possibly the stop hunt can happen. Now in this case, where all the stop hunt can happen, let me delete everything. Okay, let me mark once again. This is my bullish order block. Where all the stop hunt can happen. Stop hunt can happen. These highs, right? These lows, right? These are 4-hour time frames. And where else can happen? These lows also, right? Where else can happen? These lows also. Okay, you should remember this first of all, and these highs also, the small highs. So here every candle is important because we are seeing the market in a higher time frame, H4, not in a H1. H1 is also high time frame, but according to me, H4 is the most important high time frame, and a daily also, right? So possibly every single candle can become the liquidity point, right? Price can go below and create the liquidity graph, right? These are the areas it can happen. Okay, now so trader need to wait for the price to manipulate the liquidity. Price has to manipulate the liquidity. You need to look for that. We know, we already told you guys how to look for that. And after that only you need to mark the potential order blocks and supply and demand zones. After the manipulation, please note that after the manipulation only you need to mark the order blocks or supply and demands. And after that, you can ensure that S&D zones, supply and demand zones or order blocks should have imbalances, and it may also have the liquidity pools. It may also, I'll come to that part later. Okay, so inside the order block also you'll be having the liquidity pools. You will be having the equal lows and equal highs inside the order blocks also in a lower time frame. Okay, we'll be discussing that. And trader need to ensure that the OB and S&D should have broken the previous structure. That is also very important. So these are the general things we have discussed yesterday also. Today we'll be along with these things, we'll be using some more additional information. We'll be seeing that. Okay, now this is the general in a general high probable setup. Now let's say this is my 4-hour time frame, Euro AUD 4-hour time frame. Now I have seen the manipulation here. the green candle is manipulated, but I have considered the entire candle like its drop zone, right? So I have considered the entire zone as the bearish OB or supply zone, right? So I'll be seeing the imbalance inside or outside, right? And I can see the, what do you call this, breakup structure also. Now price is here, price is here. Now I have an equal highs here, which means a liquidity pool, and equal lows here, which means liquidity pool. Okay. Now, whenever I see the order block, a manipulation candle, order block, imbalance, and liquidity. Okay. And if price is below all these three things, just note this point. If price is below a liquidity pool, imbalance, order block, and a manipulation candle, if it is below, then price will seek for the liquidity first, okay, and it will fill the imbalance, and it will mitigate the order block and manipulation candle. From there, it will come down, and again it will look for the liquidity. It will be look for the liquidity. It will take the liquidity. Okay, just note down this. Whenever, what is the criteria? You should see the manipulation first. Okay, and after that, breakup structure should have happened. Strong impulsive move. Impulsive move consists of imbalances, and after the breakup structure, you will be marking the manipulation candle or order block, and after that, price will be trying to go up. Price will create certain liquidity pool here, liquidity pool upside and downside. Okay, from there, because price has to price should have the reasons to go up. What are the reasons here? We are having the liquidity pool here. That is one reason. Reason number one. We are having imbalance. Reason number two. We are having manipulation and order block. Reason number three. Why? Because it has to mitigate the losses. So I have three reasons to price to go up. Okay. So when you see these three reasons, you can pretty much say this order block wanna work maximum. I mean, you can say that 95% of time this order block wanna work. Sometimes it may fail. That's why I'm saying 95% is gonna work. Okay. From here, if you're taking trades, it will give you high probable trades, like 1:30, 1:40. Now, okay. Now, as of now, everyone understand this. Everyone understand this, because we're going to open the advanced price session now. As of now, everyone understand this. So we'll be looking for the liquidity pool. Okay, we'll be also looking for the manipulation. We'll be looking for the breakup structure. We'll be looking for the strong impulsive move, and we'll be looking for the imbalances, and we'll be marking the order block with manipulation. Order block with manipulation. And after that, price is trying to go up like this. It is struggling a little bit, which means I'm having the liquidity again above. So price has to clear the liquidity, touch the imbalance, and reduce their risk. From there, it will go down. That is the logic. So whenever you see a setup look like this, okay, breakup structure, manipulation, breakup structure, your order block, right? Manipulation and order block. And after that, here you are having imbalances. Okay. And after that, price was struggling to go up. Struggling to go up. Okay. Just note this, struggling to go up. In that case, you are having liquidity above these levels. Money above this level. So suddenly what will happen is, it will take the downside liquidity first, and it take upside liquidity and touch the order block. From there, it will go down. Okay. So whenever you see the compression, anybody heard this word compression? Let me go to the chart and I'll explain this. Compression. Now, this is what I'm calling compression. Is this order block? This is my manipulation candle, right? Everyone agree with me? This green candle is my manipulation candle, right? So I'm just extending, and I'm also having the breakup structures, right? And I am also having imbalances here. Okay, imbalance, I'll mark yellow. Okay, now what are you seeing here, guys? Price struggling to go up, right? This is called compression, which means whenever you see this, you may see like this. Sometimes you may see this impulsive, like this also. Okay, you'll be having your order block here. Manipulation candle, imbalance, order block, everything will be here, right? In this case, you are having money here, liquidity here. So price will take the liquidity below and it go above and it touch the order block. From there, it will go down. So if you see this setup, this is most valid setup. Now you can see here, there is a compression. This is called compression. You'll be seeing that in every single time frame. Let me delete here, everything. Every single time frame you'll be seeing this. Let me go to 1 hour time frame. Okay, let us see compression here, somewhere here. Let us go 15 minutes. Let's see in 15 minutes. Can you see here? This is my order block, right? This is my order block. Now, why this is work? Because you are having liquidity point here. Right? You have everything, right? You are here, you are having imbalance. You're having imbalance, small imbalance here, right? And here you have the manipulation, right? Manipulation happened here, order block marked, and I'm having breakout structure. 1 breakout structures, 2 breakout structure here, right? And after that, what happened? Just see here. Just see here. Price was going up and it was creating some sort of ranging, a small range here, right? In this case, as soon as you see this range, you know that there is a liquidity above this level and liquidity below this level, right? So what happened here is first it's taken the liquidity below. Why it is taking liquidity below first? Because it want to go up. It want to go up and mitigate this order block, right? So it took the liquidity below first and it gone up. It taken the liquidity here. It filled the imbalance and it mitigated the risk. It fell down. Okay. So manipulation, impulsive move, break of structure, marking order block, imbalance, mark order blocks and imbalances, and marking the liquidity pools. Okay, if you have these 4 criteria in a higher time frame, guys, please note that in a higher lower time frame also you can see this, but my personal opinion in a higher time frame, H4, H1, okay, like that. If you see these 4 things, manipulation, break of structure, order block with imbalances, and liquidity point or liquidity pool, and if you see these 4 points, now that order block is valid order block. You could say that order block is valid order block. Okay, I think now you are getting the point. Okay, it is not. Okay, great. Now. So these are all good things. These are whatever we had discussed yesterday itself, right? But how do I take entry from here? How do I take, boss? How do I take entry from here? And how do I know this is gonna work? If you have these 4 points, you can say that, okay, this order block gonna work. That is number one. If you have these 4 things, manipulation, breakup structure, order block, imbalance, and liquidity, you can say this a five thing. Manipulation, order block, imbalance, manipulation, breakup structure, order block, imbalances, and liquidity. If you have these five criteria, you can say that, okay, this order block gonna work. However, I told you guys it works 95% of time, right? So what about the 5%? It may fail also, right? Then how do I take trade? How do I know whether it is going to work or not? Okay. So that is the question, right? That's where we are going to learn about the lower time frame. Now, this is the question I have asked you guys. How do I know whether my order block or supply and demand zones works or not? Well, the straight up answer is no. You cannot 100% predict that. You cannot do that unless until you are using some professional softwares like the big players are doing, like market profile tool. There are profiles, there are tools called market profile. There's a paid softwares are available where you can see every single candle, how many buy orders happening, how many sell orders happening. That you can see, and based on that you can take decisions. But since we are retailers and we don't have the much money to purchase those softwares, so we'll be using the smart money concept and advanced precision method. The straight up answer is you cannot predict that. You cannot whether my zone is work or not. Even though I see all these 5: manipulation, breakup structure, order block, imbalances, liquidity, still I'm not know 100% whether my zone gonna work or not. Okay, but it is possible if you have the patience. Please note this point. This is key. This plays key role. Patience. I don't know. I know some of you guys don't have that. Even I don't have that sometimes. Patience. If you have the patience, you can take high probable trades with low stop losses in a lower time frame. High probable trades with a low stop loss in a lower time frame. Being a smart money trader, you need to follow the below trade stuff every time. This is the thing you need to follow every single time. Every time price touches your higher time frame order block, plus just not the higher time frame, 1 hour, 15, 1 hour, 4 hour, 2 hours, 3 hours, 30 minutes, it doesn't matter. Either at 100% or 50%. What is 100% or what is 50%? If you are marking order block like this, right? What is 100% here? If you are taking sell entry from here, this is 100% level. Okay. We are taking sell entry from the 50% of this block, then it is called 50%. Okay. Now, if you are every time price touches your higher time frame order block, you can take either 100% or 50% sell you can take, right? Buy or sell you can take. However, you need to wait and see the reaction of the price in lower time frame. When price touches your higher time frame order block, when price touches this, when price touching here, right? At very first time it is touching here, right? At the time you should not react. You should not react. You should see the price reaction first. You should see the price reaction first. Only then you have to take trade. That's why I told you guys, you should have the patience. Patience is the key thing. You should have the patience. You should not immediately, okay, it is touched my order block. I have all conditions set up, right? Manipulation, breakup structure, liquidity point, imbalance, order block, everything is fine. So I'm going to take sell entry from directly here, bang. You should not do that. Yes, you can do that, but what is the stop loss you are seeing here? What is the stop loss here? Okay, this is a 15 minutes time frame. I'm sorry. So in that case, you can take, it's a 15 minutes time frame. In that case, you can take, it's just 40 points stop loss. But let us go the higher time frame perspective. Any higher time frame order blocks. Let's go to 2-hour order block for a different. Let me delete everything. Okay. Let us see, or let us go to 4-hour. Now this is my order block, right? There's a breakout structure. There is a order block. Right now, this is a perfect example I told you guys. Order block, and this is also manipulation candle in a 4-hour time frame, right? And it also has a liquidity point here. Please note that equal highs, some sort of equal highs, which means it has the liquidity point. So this is my liquidity, or you can say this as a equal high, right? This is my manipulation, or you can say stop hunt. You can use any terminology. Stop hunt. Stop hunt has happened. OB is created. Breakout structure has happened. BO is happened, right? And I have the liquidity point here, equal highs here, some sort of equal highs here, right? It is also showing that price will come and take the equal highs. And do I have imbalances here? Yes, I'm having imbalance inside. You can see here, imbalances here, right? I'm marking that in a different color, imbalance here. So I'm having order block here. This is my H4 OB, H4 bearish OB. So why I'm marking these things? You need to mark all these things, guys. Okay. So I have H4 imbalance, IPA, imbalance price action, right? Everything is there, right? Everything is there. I have a confirmation to downside. I have stop hunt. I have a liquidity here, and I have a IPA here. I have a bearish order block here. Price touched here. I could have taken sell entry directly, but how much is my stop loss? If I'm taking 100% entry, my stop loss is 300 points, guys. I cannot afford 300 points, right? I cannot afford this. 300 points is really huge. That's why we are going to follow the lower time frame price action. We are going to follow the lower time frame price action. How do I do that? How do I do that? Let me go to the presentation a little bit, and then I told you guys price is fractal, means it's change uniformly, where a time create illusions. Every time frame candlestick shows a different chart patterns, which often create confusion to the traders. Right? We have discussed this. Traders need to understand that movement of price can be seen in lower time frame than higher time frame. I told you guys, right? When price changes, price goes upside or downside, you can see that in a 1-minute chart. But the same thing is, it will take some time to reflect in 1-hour chart, right? So where exactly price changing at very first moment? At very first moment, price changes happening in lower time frame. Price changes happening in lower time frame. Okay, and after that only, I mean, I'm not saying that it is not happening in other time frames. We can able to see the price changes in lower time frame very firstly, right? But the same the changes will be reflecting in the higher time frame at certain point, like 1 hour, 1 day, 2 hour, maybe after some time. But immediate changes will be, we can see that in a lower time frame. If trader able to find the price changes in the lower time frame, then there is a possibility trader can capture the high probable trade setups. And it is really important that trusting the lower time frame blindly is not wise choice. But if you mastered the lower time frame structures, it will give you the 100% edge in the market. Okay. Now let me go to the. Okay, this is a small example I have given. That's not required. Now, how do I capture high probable trade setup using the lower time frame? Now, please listen carefully, guys. We'll be showing this trade. How should I taken the entry from here? Now, which candle is touched very first? This green candle is touched, right? H4, this green candle is touched my imbalance zone, imbalance and order block zone, right? As soon as it's touched my order block, what I'll be doing is I'll be immediately go to lower time frame. You can go to 15 minutes or 5 minutes or maybe 3 minutes also, but I personally use 5 minutes and 15 minutes. Let's go and see in 15 minutes. Now, everyone agree with me? This is the first candle is touched, right? This green candle is touched first, right? Now, please pay attention to this price action. Now, what is happening here after that? After touching here, what is happening here? It's a breakup structure, yes or no? Right? Which means market will be going up, right? Which means market will be going up. But where exactly market is there now? Price is there. It is inside the bearish order block, right? It is inside the bearish order block. Okay. So you'll be looking for the bearish trend. We'll be looking for the selling only. So will you buy here? Because you are in a higher time frame order, selling order block. Will you buy here? Will you buy here as soon as it touched the price touched the order block? Will you buy? No. Why? Because it's a bearish order block, right? Number one. Right? Second thing is, will you sell here directly? No, you should not sell. Why? Now, what is the movement here? Up movement, right? Up movement happened, breakup structure happened, up movement, and again breakup structure. Will you buy? Will you sell if you see the uptrend? Right? You will not sell. Right? Absolutely correct. Now, what happened next? Now, what will you do? Sell or buy? Everyone, please respond. Sell or buy? Sell, right? Now, what is your H4 bias? What is your H4 bias, guys? Tell me. What is your H4 bias? Sell only, right? And what is your 15 minutes bias now? Because we are seeing this in a 15 minutes. Bearish. Now, my H4 and bearish is aligning. Right? Can I take trade now? Can I take sell trade? From where I'll be taking? Is this my order block? Everyone agree with me? I'm changing the color. Blue color. This is my order block. What's happening, guys, here? Tell me. Touched here. Fell down. How much is my stop loss? 43 points. Just 43 points, guys. And how much was your earlier stop loss? 300 points. Have you reduced here now? Can you take sell entry here? And what should be your target? Anyone can tell me? Last point of mitigation is your target, right? Now, I have marked this from H4, right? Let me go to H4. Right? Where is my last point of mitigation? This is my last point of mitigation, right? This is where my liquidity is there. This should be your target, guys. Or don't be greedy. Okay, don't be greedy. Or this is where price touched your order block, right? What is your recent swing point or recent low? This is your low, right? You can take this one, because below this also you are having liquidity, right? So this is your immediate target. Now let me let me go to 15 minutes once again. So I have marked this is my first target. Now just see here, if I take sell entry from here, my stop loss is here and my target is here. How much point it give me? It giving me 716 points, and it giving me 6.1:6 risk reward ratio. 716 points, right? $700 in Euro USD if you are trading with the standard lot, right? Now shall I look for 5 minutes entry? Because I'm still putting 40 point stop loss, right? 45 means $40. Shall I further refine? Yes, you can do that. You can do that. Let me delete everything. Let me go to 5 minutes instead of 15 minutes. Okay, I'm sorry. I'm just removing these tools. Okay. Now let me go to 5 minutes. Is this my 15 minutes order block, right? This is my 15 minutes order block. Now I can look for further confirmation also. If you don't, if you are not comfortable with this, you can take further confirmation also. But if you see here in a 5 minutes, within the 15-minute order block, let me change this color. This is my 15-minute order block. So I'll change this color to something visible, gray. Let's take this gray. Okay. Now you can do several things here. Like if you can see here, if you have any imbalance here, yes, I'm having imbalance here, right? From this candle to this candle, I'm having imbalance, right? So I'm changing the imbalance color to red. Now you could have taken entry from here, right? In that case, you can place the 50% of imbalance entry from 50%. Okay, and you can place your stop loss above the, what do you call this, 15 minutes order block, or you can simply take the 15 minutes order blocks, 50% of 15 minutes order block, 50% of 15 minutes order block. Okay, in that case, how much is your stop loss? 27 points, guys. Now it is not at all possible. It is, I can tell you that it is not at all possible to reduce a stop loss like 20 points, 30 points in a Forex market. Why I'm saying here is you'll be having spread, right? You'll be having spread. So every currency pair has a spread. So reducing stop loss is kind of a difficult challenge. But if you're having the raw spread account, or if you are having FTMO account, which does not have much commissions, they won't be charging much commission. In that case, you can enjoy this 24/7, the 24 point stop losses. 24 points means if you're taking standard lot, it's a 27 point means it's a $27. If you're taking many lots, it's just $2.7. Just $2.7. It is not at all possible. I can damn sure I can tell you that if you go through any Forex strategy in the YouTube, in anywhere, right? They will be placing stop loss of 100 points. They'll be placing stop loss of 70 points, 80 points, and more than 100 points. I can damn sure that nobody will give you the below 50 points stop loss method, because that one doesn't exist. But if you follow this, you can capture this. Okay, now for example, you don't have the confidence here. In that case, I'm not confident should this works or not. I don't have confidence. In that case, what you can do? Again, you can let me go to again 15 minutes time frame. See. Now, do you see one more break of structure here? Right now, tell me which one you will be marking as an order block. Now, this is the last green candle before this down movement, right? So, will this would be your order block? Correct. Do you see here what is happening here? Perfectly touched here, fell out. Now you may have the doubt here, should I take here or not? Just go to 3 minutes. Let's go to 3 minutes. Right? And what's happening here? Exactly in 3 minutes, it touched the order block, fell down, and it broke the structure. Let me delete this line. It broke the structure here, right? Small structure is broken, but price did not come back. No worries, no worry. Okay, it will come back because market is closed now. It will come back next Monday, and I can see one more break of structure here, right? In that case, shall I consider this extreme one as a because it's manipulation, right? It manipulated the previous highs, you can see. So shall I consider this entire candle as order block? Now just extend this box, just remember the chart, just see this Euro USD 3-minute chart Monday. Please see this chart, guys. You'll see the reaction from this level. I can tell you, you will see the reaction from there. Price will go up like this, touch here and go down. I can damn sure about this. Okay, Monday you can watch this chart, right? So let me explain this in a different chart. Let me delete everything. Let me go to a different chart. Let's go to USD CAD, a different pair we can see. Let's go to daily, or maybe let's go to 1 hour. Now let's see some past examples, and then we'll see the live. Cannot see the live now. Let's see the recent one itself. Now everyone agree with me, this is my breakup structure, and everyone agree with me, this is my manipulation and order block, right? Correct. And do you guys agree with me, I'm having equal highs here? This is my equal high, and this is my breakup structure, US, and this is my, what do you call it? This is my H1 order block, H1 manipulation and order block, OB, right? Now this is the first candle it touched the order block, right? This is the green candle. This big green candle is touched my order block first. Will you sell as soon as you see this is a big giant candle? Will you sell? Nobody will sell, right? Because market is going up. We will not sell. So what I'll be doing here is, as soon as I see this bullish candle, I'll immediately go to the 5 minutes time frame. Let's go to the 5-minute time frame. Okay. Now just see what is happening here. Just see here, guys. How beautiful is this? See, this is a big up candle, right? So it touched the order block. I will not sell immediately because it's an up candle, guys. It broke the structure also. I will not sell. Okay, and I will not buy also because it's a bearish order block. I should not buy. It's a bearish order block. As soon as you see this, don't buy because you are approaching to the bearish order block, right? And you don't sell because you don't see the weakness of buy market. Buy market is still strong. Now, what do you see here? Breakup structure. Where exactly the breakup structure from initiated? Order block here. Now, what happened here? You guys see here? If you take 50% entry from this order block, now see the stop loss. 27 points, 30 points. Just let's take that 30 points. Right? You could have sold from here. Or if you don't have confidence, then look for one more breakout structure, which has happened here. Right? And what is my order block? This is my order block. This green candle. Extend this. Take 50% entry. Now see, you will not have any drawdown, guys. After touching your order block, price will go down. It will not like ranging or it will not go up. Now, can you see here? Your stop loss is broken. Can you see here? Anyone can see this here? Your stop loss is triggered or touched. You lost anything? No. Even you are putting only 20 points stop loss. Here also it is 20 points, somewhere around 20 points. Yeah, 28 points. Right? You don't see, you are capturing the sniper entries here. After your entry is triggered, market going straight away downside. Right? Now we have marked the order block from 1 hour. So let's go to 1 hour. So you have taken entry from this area. And what should be your target? Your 1 hour swing low. This is my your 1 hour swing low. This should be your maximum target. This should be your maximum target. Or you can look for the previous candle's low. This candle also you can target. It's up to you guys. But it's up to you. You can capture the entire movement. If you have the patience, you can sit inside in front of the PC and you can capture this down movement. Okay. Or you can simply put your target order here. You can capture the down movement. Now, either way, if you're taking sell entry from here, from the 5-minute candle, 5-minute chart. Okay. From here, say for example, you are taking second entry, no issues, because you are not confident to take first entry. So you are taking second entry and your stop loss is here. And your target should be this 1 hour low or maybe the previous low. So for example, I am targeting, if I am targeting the 1 hour swing low, in that case, how much point it giving me? Now see the risk reward ratio, it is 1:11. 1:11. And you are capturing 380 points. Not much. It depends upon the pair to pair also, but 380 points. But if you're capturing here, you have already captured 200 points. That is, I told you guys 200 points is more than enough. But how much you are risking? Only 33 points. 33 points was your risk. And just remember, guys, this is a 5-minute order block. You can still refine this in a 1 minute also. In that case, your stop loss will be like maybe 15 points. You can still refine that, but I'll teach that for you guys, but I don't do that. I'll be sticking with 5 minutes and 3 minutes at the max. Okay. So like that, you can capture this down moment. This will be happening every single time. Now you have captured a 300 point here, right? Now again, you go to 1 hour. Now what happened? Second time also price came, right? Second time also price came here. Now if you see here, let me delete everything. Okay, let me again mark this 1 hour candle. Where exactly we have seen, here we have seen this, right? So this is my manipulation candle. First entry I have captured here. Second time, just notice second time what happens here. What is this? Manipulation, right? Manipulation happened. Okay. So just go to 5 minutes. Now you are seeing the manipulation. Absolutely, you are seeing the manipulation. But after that, what happened? Price just fell down. Straightly fell down. Sometimes, if this kind of price action, you cannot take entry. So you should see something like this. Only then you can take the entry. So possibly that might have happened in 3 minutes or 1 minute. Let's go to 1 minute. Let's go to 1 minute. Let's see if you have any proper we'll see whether any proper breakup structures are happening here or not. Let's see here. Now you can see here I'm seeing the proper breakup structure here, right? Unfortunately, I'm having the zone here, but price didn't come back. Yeah, it's because of the fast movement. Sometimes you don't get this. Here also, it is somewhat touched here. Second time, it somewhat touched here. So you could have taken this entry. But in a 1 minute time frame, where exactly it happened, where exactly got a chance. So you didn't get the chance here, right? You again drop base, drop zone. So you didn't get the chance. You didn't get the chance here, but you got the chance here. Now you can see here. This is some sort of zone, right? Drop base, drop zone. So you got the opportunity to enter here, but it is not a big one, but still it's a 130 point movement. Okay, so in the second option you didn't get this entry option, didn't get the entry option. However, you could have taken the entry using a different approach. Now this is my breakup structure, and after that technically what should be my order block? If it is a breakup structure, technically I'm deleting these things. Technically, let me see why it is not deleting. Yeah, technically this should be your order block. Everyone agree with me? It's a breakup structure, means this should be your order block. Now the order block is failed. Now it become breaker block, right? In that case, you could have entered here, but here itself also it didn't touched. Okay, just leave it. Then you have one more order block here, right? Technically, this should be your order block. Sorry. It is broken. Now what it becomes? Can you guys see here? Breaker block. So you could have taken entry from here in a 1 minute chart. So how much is your stop loss? I think it bit high, 40 points. Yeah, whatever. 40 points is still lesser than 100 points, right? You could have captured this down. So using this logic, you could have taken this entry. But yeah, based on order block, you didn't get the opportunity. But based on breaker block, you got the opportunity, selling opportunity, right? So this is second time you got this opportunity. Yeah, flip zone. We'll see live chart in crypto also, but the thing is, Saturday Sunday's crypto market won't be giving you the volatility. So we'll see that in live market also. Let's see different. Please share any currency pair, guys. Please give me a currency pair. Please give me a currency pair. One by one. GBP USD 1 hour. Okay, let's see the GBP USD. My favorite pair. We'll see the CAD JPY next. GPP, JPY. We'll see the crude oil also. We'll see the bank nifty also. Japanese candlesticks. Okay. So GBP. Oh, sorry. GBP. USD, right? USD. So let me delete everything if I have any drawing. I have deleted everything. Now 1 hour candle, right? I have taken 1 hour candle. Now straight away you can see here. Straight away you can see here an order block. This is my order block. My order block is respected perfectly, right? And I have breakup structure. Now, at very first time, price barely touched here. So you can, if you consider here, it is touched here, right? It is touched here. Second time it is touched here. Let's see. Let's go to directly 5 minutes. So very first time, I have seen the touch here, right? After that, what happened? Structure is broken, right? Now, which one is my order block? This is my order block. What happened here? It given me some points, right? It touched here and it given me 200 points, 250 points it given me. Or maybe you can consider this a 200 point limit. Now, how much is my stop loss? This is 190 point, which is huge. I cannot take this. So I'll be taking 50% one, right? So in that case, how much is my stop loss? So this is again 100 points. So I don't take this trade. See, anything below 100, I mean, like 70, 60, 50, that I'll be taking. In my personal opinion, I'll be doing like that. Okay. So anything above 100 or 60, 70, and I hesitate to take trades. In that case, what I'll be doing is I'll be refining the order block once again. Refining this order block. How I'll be doing that? I'll be going to maybe 3 minutes or 1 minute. Let us go to 3 minutes first. So here now can I see the last bearish bullish candle? This is my last bullish candle, right? So I'll be marking only this one. And whenever I do refinement, I don't take 50% entry. I'll be taking 100% entry because there's a chance price may not come at 50% level. So in this case, how much is my stop loss again? Let's see. This is again 180 points. So I don't take this trade. I don't take this trade, or I'll be waiting for the 50% touch. Okay. Here exactly the 50% is touched, but just see the price action. Just to see the price action. It is broken the structure, gone up, and what is it creating? Higher lows, right? Higher lows, higher lows, higher lows, higher lows. So I don't see the breakup structure. I don't see the breakup structure after touching this order block. After touching this order block, I don't see this breakup structure, right? So I may not take entry from either 50% level also. From here also, if I'm my stop loss is high first. Second thing is my 50% order is not triggered. Third thing is I don't see the breakup structure. So I doubt I don't take entry from here. I don't take entry from here. I don't take entries. Okay. So I'll avoid this. And the second thing is I want to see the price action. I mean, the price should go inside the higher time frame order block, inside the 1 hour order block. It is touched, barely touched, given the reaction. Yes, this also sometimes works, but I want to see at least price to go inside the order block. By the way, I mean, to be honest, I want to see price to touch the 50% of 1 hour order block. 50% of 1 hour order block. Only then I'll be looking for that confirmation, sell confirmation. Okay, sometimes it may not happen, guys. At the time you will be losing the opportunity to trade, but you won't lose the money. See, market is there for every single day, right? Price is there, money is there every single day. So if you are missing opportunity today, tomorrow you'll be getting opportunity. So don't worry about that. So always stick with 50% entry. If it is a lower time frame block, like 1 minute block, 5 minutes block, in that case, you can choose 100% entry. But in a higher time frame order blocks, look for the 50% entry. Only look for the 50% entry. Now, can you guys tell me, now it is touched my 50%, right? It is touched my 50% here. Exactly, it is touched my 50%. Now, what I will be doing, I'll be go to 5 minutes. I'll go to 5 minutes. Exactly where it is touched my 50%. Here, exactly, it is touched my 50%. But just see here, it is failed. After that, what happened? It just broken the structure. It just broken the structure. And this is now my order block, right? It is failed. It is failed. Yes, it happens sometimes. So you'll be losing how much? You'll be losing 45 points if you are putting the 100% entry. If you are putting 50% entry, then you'll be losing only 39 points. 30. Somewhere around 25 points, like that you will be losing, right? Okay. Now only you can say that your setup is failed. Don't worry. What happened next? After now, why this happened? It grabbed the liquidity above. Okay, it is grabbed the liquidity above. Now you can see it broke the structure. Now what are you seeing here? One more order block, right? It is touched here, but since I lost here, I don't have the courage to take because it is not touching my 50%, and I don't want to lose again. So I'll be waiting. I want to see more breakout structures. So I can tell you guys, I have seen one more breakout structure here. Right? Now I can say this is my order block. Right? Now what happened? You got the entry. You got the entry from here. Right? So you will be taking your short position from here, and you're placing your stop loss above this. And what is your target? Your target should be your 1 hour swing point or 1 hour lows. Now you are taking your entry from here, right? This one is failed. You lost some money, no issues. You are taking entry from here, and what should be your target? Your target should be this one. This one should be your target, and this one should be your first target. At least you have to book your profit here. Now just you can see here, price is going down. If you are taking sell entry from here, now from 5 minutes, and your target should be at least this or this. Technically, it should be your target. This is your last point of mitigation. Okay, but if you are capturing your profit here, then how much point is this? In this low, right? It is 500 points. 1:13. But if you are capturing this down movement, technically your target should be this, and price is not yet gone here. It is still traveling. So it's around 900 points, and it's 1:25. It is 1:25 point movement, right? But you are still having doubt in this area. I don't want to take this trade because people will have the confusions, right? So delete this. Let's wait for more confirmations. Now I have the breakout structure here, or maybe you can see I have breakout structure here. I have a breakout structure here. I have a breakout structure here. Don't look for the breakout structure the upside because we are in a bearish market. So we have to look for the downside breakout structure. Now you can see here you have the order block here, right? This order block is touched, right? It is not touched, but let's zoom in a little bit. So technically, we'll be marking these two candles, right? If you're marking these two candles, you would have captured. But if you're marking only, that's why I said you guys, sometimes your manipulation candle will not touch. Technically, this is my manipulation candle, but my manipulation candle is not touched. So in that case, you'll be losing. But if you have taken like this, you could have taken entry from here. So no worries. You missed this opportunity. No worries. Right now, I have one more breakup structure here. Now this is my order block. How I am saying this is my order block? Just see here. There is this candle is manipulative candle. This red candle. 50% entry. Sell. And if you are selling from here, again your target should be your target should be this one only, exactly this one only, or maybe this one also. Okay, in that case also you'll be losing some points, but you will be still making profit. Of course, you'll be losing some points, some good points you'll be losing, but still you are in the profit, right? So here you are making 480 points, or you are losing somewhere around. Earlier we see 560 points, right? So you are losing around 100 points here, but still you are making 400 points, right? Your target should be this, or you can still capture only 200 points as per my suggestion. Just 200 points here. You can take couple of trades, right? Here also you can take one trade, 200 points. Close this trade and take this trade, 200 points. Take here 200 points, right? You can do like this also. 200 point, 200 point, 3 different trades you can take, or you can still hold the one single trade. It's up to you. One day in a couple of different times you can take trades. Now, this is exactly happened on 7:30 in the morning, early morning, morning 7:30, and this has happened on 1 o'clock London market, and this has happened on around 7:15 New York market. So see, the same day you are getting opportunity in morning session, Asian session, London session, New York session. You get a 3 opportunity in a single pair, GBP USD, right? But once you lost this down movement, you may not get opportunities. So you need to capture here itself. If you are waiting for more breakup structure, more order block testing, sometimes it may not happen. So if you miss these 3 opportunities, so you are missing this entire down movement. Okay. 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 I'll explain it. We'll see the different pair. Yeah. Let me see. GBP USD, CAD JPY will see, and USD JPY will see. Let's see the USD JPY. Let me delete, and then we'll move to CAD JPY. USD JPY. Let's see all this from 1 hour time frame. But thing is, guys, when you come from 1 hour time frame, you may not capture more than 400-500 points. But if you come from the 4 hour perspective, you may have the opportunity to capture more points. Let's stick with 1 hour time frame, because you are all office goers, right? You don't have the time to sit in front of a market. So let's see, is there any order block worked here? Now you can see here, there's an order block worked here, right? This is my order block. It worked here. Now you can see here, my manipulation candle is this one, the bottom one, right? But my manipulation candle is not touched. That's why whenever you see manipulation candle and order block, like last bearish candle, just mark these 2 candles. As I told you guys, we are not gonna take direct entries here, right? So don't worry about the stop loss. Just mark manipulation candle as well as order block, both candles, right? Now you can see here, price touched the order block. Now you can straight away take entry from 1 hour also. Let's see here. Let's see here. And after that, after touching the order block, it broke the structures. Now it is not a proper broke, but you can still consider as a break of structure. Now this is your, what do you call it? This is your manipulation candle. Now see here, it is again touched. You can directly take trade from 1 hour, but stop loss will be higher. So you don't need to do this. Okay. If you have the opportunity, you can do this also. That's what I'm trying to insist. I'm insisting here, right? But you don't need to do that. Let's go to the lower time frame. Okay. I have marked a 1 hour order block and removing this. Okay. Let's go to 5 minutes first. Do I have any? After now, you can see here it is touched here. And after that, what happened, guys? Just see here, guys. It's broke the structures. Now you will be thinking that, oh, I'm missing this super movement, right? You don't need to worry about that. Now, which one is my manipulation candle? Now I have two zones here. My first zone is this one. This is my manipulation candle, right? And second one is here. Rally, base rally, right? So if you see here, my rally base rally is worked, but it did not given me the whatever I desired. It given me some points, like if you would have bought from here, so it gave me 300 points, which is good, but I can able to only target here. So if you would have bought from here, maybe from 50%, right? So how much stop loss will be? Long position. So stop loss is like 40 points. Yes, it is reasonable. It is reasonable, guys. And your target should be this one. This one. But it took long time to go there. See the choppy market. So when you enter from here, if you see the choppy market, you will get fed up, right? You'll get frustrated with this kind of setup. So always prefer for the manipulation candle. The one which is mitigated the order block, right? One which is mitigated the higher time frame order block. This is the one which mitigated this order block, right? Not this one. So you could have taken this buy entry also if you have the patience. So how much time it went? It given. Let's go to 1 hour time frame. Let's see how much time it was going up. So it given me how many candles? It's around 9 bars, which means 9 hours it was traveling from here to here. 9 hours, which is really unacceptable, right? So we cannot wait 9 hours. When exactly happened? This order block is mitigated exactly at 8:30 in the New York session. 8:30 in the New York session, right? Night. So if you could have bought from here, you could have waited till next day 5:30. 5:30 early morning 5:30. So yeah, you could have taken the trade and you could have sleep. You put your target here and you could have slept, right? But now let's drag this manipulation candle. Should this reacted or not? Let us see here whether it is reacted or not. No, it is not reacted. So unfortunately, we didn't get the opportunity now. As of now, we didn't get the opportunity. But let's see the price action further. Do we have any more opportunity? We don't have the opportunity as of now, but we can see some breakout structures are happening here, right? And you can see here this candle. Now just see this candle. This is went below the previous candle, right? Everyone see this? It went below the previous candle, which means it took the liquidity from below. So technically, this is now your manipulation candle, right? Now it's broken the structure here, came back, it touched here once again, gone up. and again it broken the structure here. Now this is my entire thing is my order block, because these are continuous red candles. So this is reacted here, right? So you could have taken entry from here in this area, because you see the manipulation here, right? So in that case, what should be your target? Now this is already touched, right? Now you have equal highs here, right? So you can target here if you're buying from here, and your stop loss should be like, it is 80 points, which is not acceptable. In that case, you can set your stop loss at 50% level also. You can do that also. So I have captured this up movement again. It's again 270 point, and USD JPY is not the volatile pair as compared to Euro USD and the GBP USD. So say anything above 200 is more sufficient in this particular situation, right? Now again, you can see here, I have the breakout structure. Let us see here, is there anything here? Okay, in this, nothing here. Now this is something which we missed. When it exactly happened, it happened exactly at New York opening, 6 o'clock in the evening. In that case, it might be the news based movement. Now what I can tell you guys, now you can see the manipulation with the downside. So this should be your order block for the future. Okay, in future, if price comes down here, you can take buy entry. Similarly, do you have any option here? We are seeing this in a 15 minutes. Okay, now you can see what is happening in the present. What is happening? It created the high, it created the lower high, and tomorrow or Monday, if price broke this level, like this, okay, you look for the sell entry from here and take till this level, this order block, the bottom order block. The target should be this bottom order block, okay, or maybe this order block, okay, because now it's falling. It is not exactly falling, but I want to see the breakup structure like this. In that case, price will come up and fell down. So Monday you may get this opportunity. Not Monday. Monday also will be getting opportunity, but most probably Tuesdays. Okay. So let's see some more examples. Let's see, is there any pair we can see? Which one? Yeah. Who are having the doubt? I think you can ask. Let me see. Let's see the crude oil. Then we'll move to the. I'll explain that once again in the crude oil and Bank Nifty. Then we'll do that. We'll clear our doubts. Okay. Okay. Let's go to the crude oil chart. XTI-USD. Let's go to 1 hour time frame crude oil. Right. Now let's see, is there any order blocks worked or not? Yeah, ping pong. I'll tell you guys. Ping pong, yes. No worries. Now, tell me now, crude oil is bullish, right? It is bullish. Now I'm having only the order block here. This is my manipulation candle, the bottom one. Let me take the entire thing for now. This is my manipulation area. From here, I'll be buying, right? I'll be buying, correct? But price is here now. Price is here now. So it has to come here. Only then I can buy from here. So how do we take sell entry from here? How do I take sell entry from here? For that, I'll be going to the lower time frame, like 5 minutes or 15 minutes. Let's go to 5 minutes now. Now, what is price is doing above? What is price doing here? It is choppy, right? It is don't have the any direction, right? It is choppy. It's kind of going like this, right? Now I want to see the liquidity graph first, like this, maybe like this, and maybe like this, right? And then I want to see once again this one. I'll be having the manipulation candle here, and manipulation candle is tested here. I can take entry directly from here, or I'll wait for the one more break of structure, because in this case here is manipulated and this area is also manipulated, right? These lows also taken. So I want to see the proper break of structure. Here I have see the proper break of structure. Now, can you guys tell me that this is my order block, which is broken the structure? Now, what I'll be expecting is price has to come like this. From here, I'll be taking sell entry. If I take sell entry, my target should be like this. Either this one or either this one. Okay. So I have taken my sell entry from here. I have closed my sell entry here. I took sell trade. Now here, what I'll be looking? Here, I'll be looking for an up movement, a down movement, and a break of structure, right? A break of structure. Now, is this my order block? Right? And I'll be waiting for the price to come again to touch the order block. And again, it will broke. It will create one more order block here. Right? I take entry from here or from here. And my target should be more than the previous high. Now, this is my last point of mitigation. Right? Or sorry, this is my last point of mitigation. Right? So my target should be like this. So this you can do in 5 minutes. You can do this in a 15 minutes. You can do this in a 1 hour. You can do this in a 4 hour. You can do this in a 1 minute also. So you will not directly trade the zones. You will be looking for the price action inside the zones. You'll be looking for the price to break the structures inside the zones. So what you are going to look for inside the zones? First thing is you will be looking for stop hunt. Second thing is break of structure. Third thing is order block. All these three things you will be seeing in higher time frame. Okay. After that, you'll be looking for the lower time frame BOS, lower time frame OB, lower time frame entry. And sometimes you'll be looking for lower time frame stop hunt also. So this is the formula you need to remember. Okay. Stop hunt BOS OB in the higher time frame. Then once price touched my OB, higher time frame OB, I'll be looking for lower time frames stop hunt or lower time frame breakup structure, lower time frame BOB, and lower time frame entry. I'll be taking lower time frame entry. Okay, just remember this point. Just remember this. Okay, let's see some different example. Let's see the crude oil past examples, whether we have anything like this or not. Now you can see here. Let me delete everything. Let me delete everything. Let me go to 4 hour. You can see here, this is my rally base rally zone, right? My rally base rally zone is touched here, right? Now I'll be taking entry. How I'll be taking entry? I'll be immediately go to 5 minutes. So let's look for the block which we have drawn. Okay, this is where we have drawn, right? Now let's see here. Do you have any proper breakup structure? Now I can tell you that there's a breakup structure here, right? And after that, price did not come back. So it's very sad. So this is my order block. These two candles are my order block. Let's mark only this bottom candle. It didn't come back. Okay, no worries. Now after that, what happened? It broken almost one more structure here. You can say this is not a breakup structure. Exactly here structure is broken. But let's go to 3 minutes. Let's see, is there any more structures are we are having or not? Structure breaks or happens or not? Yeah. Okay, here you don't have anything. Here you don't. Unfortunately, you don't have anything. You had breakup structure here, but price did not came back, right? So now, if you can see, there is a small supply zone. The demand zone is there here, but I'm not sure whether you guys could have taken or not. But based on the breaker block concept, you could have taken, right? How? Let's delete everything. Right, let's delete this also. Now before it go down, it broken the structure here, and this should be your order block technically, right? Now the order block is broken, right? And also your 3 minute structure also broken. Order block is broken and 3 minute structure also broken. Now it becomes a breaker block. Now you could have taken 50% entry. Long position, right? So what is your target? So we came from 4 hour order block, right? So if you're buying from here, your target should be at least this one, the previous swing point, this one, or you can target this one, or you can target this one, because you are coming from the 4 hour order block. So you should aim for the 4 hour swing point, right? So, but the entry you are taking is 5 minutes, 5 minutes only, 3 minutes only you are taking, right? In a 3 minute chart only you are taking the entry. Exactly here you are taking entry, right? From the breaker block you are taking entry. So this should be your first target. So around $2.6. So 2.6 points. I'm not sure how much it is. If it is in MCX, I think 100 rupees for every single point, right? Every single point 100 rupees will be. But I'm not sure about XTUSD because I haven't traded crude oil in Forex market. I have traded only in MCX. That itself also a long time before. Can you guys tell me how much is exactly? Yes, the main thing is it reduce your stop losses. The second thing is it will give you the perfect entry, right? This is reduce your stop loss, as well as it will be reducing your risk, right? Like it will give you the more opportunity. Okay, right? So You can aim this or you can aim this also. Right? Okay, 0.01 is 1 USD per point, which means now it is given you around how much it given you? It given you 2.7, which means it's a very decent profit, right? 0.01 itself 1 USD. In that case, like it is like around $200 to 250, $26. Okay, and yeah, 226 something, somewhere around. Okay, great. So yeah, so the thing is, this is kind of difficult for you guys now to understand this. Let's go to Bank Nifty. So I have already marked something. Let me delete everything. Now, if you go to Bank Nifty, my personal preferences, I'll be trading only. I will take the daily chart and I'll straight away go to 15-minute chart. Most of the time, I'll mark 15 minutes order blocks. Okay, 15 minutes order block itself, my what you call my higher time frame order blocks, because we have only limited amount of time to trade, right? So in this case, we don't have the proper order blocks. You can say this is my drop base drop. I think we have seen this yesterday. So let's see something different. We have seen this yesterday, right? So let's see. Let us take the gap up, gap down, right? Now this is my gap down, gap up. 15-minute gap up. Now this is also my zone. Now price touched here. As soon as it's touched here, I'll go to 1 minute. I'll go to 1 minute. Now, why I'm marking gap up, gap down? Because I don't see the proper order blocks. That's why I'm taking gap up, gap downs, right? Now you can see here. Do you guys see here? As soon as it's touched here, it's an opening candle. Oh, sorry, it's not an opening candle. It's a closing candle for that. This was an opening candle. This was an opening candle of 1st June, right? The 1st June candle was broken the structure, opening candle. Just remember, first 15-minute opening candle was broken the structure, right? But prior to that, it was my drop base drop zone, right? It was my drop base drop zone. It broken the structure and price came back and touched my breaker block or flip zone, right? It touched the flip zone, but I'm not confident to take entry from here. In that case, okay, I'm in a 1 minute time frame, right? Then I can obviously I can take trades. I can take trades. Or if you don't have the confidence, you can wait for one more break of structure. Break of structure happened here, and now this is my order block. Now I cannot tell you this one is my order block because it's a 1 minute time frame. So you might have to mark the entire thing because these two are last bearish candle. Okay, in that case, you get the opportunity here. But if you mark only the bottom red candle, then you may not have the opportunity now, but you may have the opportunity next day, I guess. Next day, you got some quick points you could have taken. But technically, in this case, you need to mark these two bearish candle, or in this case, you can mark this bullish candle because it's a manipulation candle, right? The bullish candle gone below the previous low, previous candle's low. So this is my manipulation candle. So I'm marking manipulation candle, and I see that manipulation candle is touched here, right? So since it's a 1 minute candle, so I don't have any other option. So how much point it given? Stop loss. It is 87 point, which is really, really huge. So in that case, I will be looking for the buy entry from here, right? And every 1 minute order block, I'll be taking entry from the 100% level only. I don't take entry from the 50% level. In that case, I have one more confluence that inside this, you can see a rally, a base, a rally, a small doji kind of candle, right? So you can refine this candle like this, right? Rally base rally, right? So it's broken the structure also. So you can refine like this, right? And you can put your entry from top, and place your stop loss at 50% level, right? And your target should be this high or maybe this high. So it's happened. I think it given me small points, 124 points only, because you are coming from the 15 minutes order block, not from the daily order block. It's just a 15-minute order block, and you have taken the lower time frame entry in a 1-minute chart. In a 1-minute chart, your higher time frame order block is 15 minutes, and your lower time frame order block is 1 minute. So in that case, 100 points is it's a feasible, I can say, but it's still gone above that 100 points. But we may not capture this because of this is here only we are having this. But if you could have came this from the 1 hour or daily perspective, then you can easily capture 200, 400, 300 points in the Bank Nifty also. Now let's see some more example in the Bank Nifty. Let's go to daily perspective. Let's take the daily gap up or gap down as an order block. Or let's see some order blocks here. Where else we are having order blocks? Any order blocks tested? Okay, let's delete everything. Let's go weekly. One step ahead. Now you can see I'm having the drop, base, drop. I have a breakup structure here, right? Now you can tell me that this is my drop, base, drop zone, supply zone, right? So it's my supply zone. Now price touched here, right? Weekly zone, and it reacted. Now how I could have captured this? I could have gone to the 15 minutes or maybe 5 minutes. Let us go here. This is where first time it is touched. First time it is touched here. This was my zone. First time touched here. Now you can see can you guys see the breakup structure? It was a drop, right? A base, a drop, right? And also it's broken the structure here. It broken the structure here. And previous structures also would have been broken. I can tell you that. Okay, I'm having structure here, right? So I don't have the proper structure here, but you can consider this one as a breakup structure, and this one is also breakup structure, and even here also you are having the breakup structure. Now, if you consider this as a breakup structure, this is a breakup structure, your order block is like here, right? Just extend this. Exactly, this is your order block, right? Price barely touched here, barely, it didn't come up, but it barely touched here. It took the liquidity above and gone down, right? Okay, you missed this opportunity, no worries, because it not happened, it happened only here, right? This down movement is missed, the big movement is missed, no worries. But here you have drop base, drop zone. Now see here, you got the one opportunity here, entry, sell entry, second opportunity here, right? So you could have refined this further also. 3 minutes, let's go to 3 minutes or 5 minutes. Let's go to 3 minutes. Right now this is my order block in 15 minutes. Price is touched by 15 minutes order block, and you can see here that's a breakup structure has happened, right? So after that, this was my entire candle. You got the opportunity here, right? Or you may say that there is a breakup structure here also, even though there's a gap down is there. Gap down is kind of invisible candle, right? So it is broken, price came back, touched this level. But if you don't have courage to take entry here, just wait for further more time. Just wait for further more time. Now what happened here? Again breakup structure happened, right? What is my order block? The extreme one, extreme swing point, or you can consider this entire as order block. But let us consider the extreme one. Why? Because it took the liquidity of these levels. It took the liquidity of this level, right? So we can consider this, extend this, touched here, fell down, right? Second time also it touched here, fell down. It gave me the opportunity. But in second time, technically you can see here one more breakout structure, one more order block with manipulation candle, right? Touched here, fell down. And here also you can have breakout structure, right? This is your drop based drop zone, touched here, fell down. And here also you can see breakout structure, my manipulation candle. Can you guys see this? Can you guys see this? Can you guys correlate this? I know that it's a bit confusing, but can you guys see this? You see this very big down movement that you could have captured from here. This down movement you could have captured from here, right? So how much points are these points? I not even know much points. It given you 300, 400 points, but it may not happen immediately because markets have the limited times, right? So if you're option trader, like if you're selling put option, if you're buying put option, you could have bought from here at the money option or in the money option, right? So you could have captured this 300 point. So it will be really good if you're an option trader, but it is also works in the futures market also, because I am trading only futures market, right? And by the way, you can capture. Now see again, there's order block, breakup structure, tested, fell down, and after that price broken the upside moves also, right? You can see upside break, and I'm having the manipulation candle. This is my manipulation candle, and I have two manipulation candles. This is my manipulation candle, and the manipulation candle is tested, and this manipulation candle was tested by this manipulation candle, right? So this is my rally based rally also, buy entry. So by the way, you can trade. See, if I zoom out, you see how many opportunities are in the bank nifty. How many opportunities? The thing is, you need to practice. You need to practice this lot. And if you see this, everything's happened inside the higher time frame order block. We are not straight away taking anywhere. We are choosing the higher time frame order block. Inside this, we are capturing this 100, 200 points movements in a quick manner. That is what intraday traders do, right? So this is how we need to trade. Now let me, yeah. Fibonacci retracement. We don't use the Fibonacci retracement, but we are having a strategy. I think probably we'll learn tomorrow indicator-based strategies. Okay, I'll teach you guys how to take indicator-based strategies. Taking entry in the lower time frame, reduce the stop loss. Yes, absolutely, sir. It might be confusing, Abramson. I can tell you that it is confusing, but once you master this strategy, it will be giving you the picture perfectly without drawdown. Without drawdown, that is the key thing. Yes, this is the advanced technique, guys. This is the advanced technique. This is what people don't teach you. This is what people don't teach you. Structure is everything. When you follow the structure, you can able to capture the good movement every single time, right? Let me see. Yes, ping pong trade. I think I have shown you guys. I'll show this in one more time in any other currency pairs. Let's go to what is it? XAUSD, right? Gold. Everyone's favorite, gold. Okay. So what do you guys think? It is confusing or it is, what do you guys think? Please give me the honest review. Or you didn't expect this one? You are expecting something Amazing. Do you guys find? I think I need to know the yes, yes, because Arun sir is asking so many times that is this your advanced technique? Is this like that? The tone is like that. I was expecting something amazing, but is this you are trying to say like that? You are asking. Bit confusing and yes, it's bit confusing, guys. It's bit confusing. Thank you, madam. Thank you, Kanchan, madam, for your. Yes, sir. It required a lot of patience, sir. It required a lot of because now as soon as you see this up movement, you will be tempted to take buy entry, right? Okay, I'll show this in a live market in a BTC USD. You guys saying the BTC USD, right? BTC USD. Let me show this in a live market. Let's go to yeah. Now we can see here 1 hour chart, right? Now clearly market is downtrend, right? Clearly it is breaking structure, downtrend. But I can say that it is not yet down. It was ranging. It took the liquidity here, right? In the bottom, the liquidity is taken. Okay. Now, but it's literally ranging, guys. It's literally ranging. Any other pair we can see with ETH USD? Is it good? Cryptocurrency, Ethereum. It is also ranging. Sol, SOUL, Sol USDT. Gosh. Near USDT. Let's take Binance. Tell me, guys. I think Mana. Okay, Mana, Litecoin, ETC. Mana. Let's see. But I want to see the proper price action because every coin is ranging. You can see here, it is ranging. It is not broken below structures, right? So Mana. Let's see Mana. Let's see Litecoin. Okay, this is somewhat better. I think. Else we'll go to ETC itself, ETC USD, because it's a high volume coin, right? Okay, we'll see the what do you call it? Let us assume that it is already taken the liquidity, right? It is already taken the liquidity here, this low. Okay, in 1 hour. Now, this is my manipulation candle. This entire candle is my manipulation candle, right? In 1 hour. Now I'll be extending this candle. Entire candle I'm marking. You can do this in 50% also. Sometimes you may not get opportunity. So that's why I'm saying mark entire manipulation candle. This is my manipulation candle, right? I marked it here. Now price is approaching my manipulation candle. Price is approaching my manipulation candle, right? Now at this time, I'll go to 5 minutes time frame. I'll go to 5 minutes time frame. Okay. So this is where exactly price approached my the manipulation candle. Now, what do we see here? Clearly, we're seeing the downtrends, right? Break of flow, right? So this is falling knife. Falling knife. You cannot catch the falling knife, right? So in that case, just wait, just patiently wait for the break of structure to happen. Okay. Now, where exactly break of structure happened? Right here, the first break of structure to the upside is happened here. Okay, and second break of structure has happened here. Okay, now which one is my candle order block? This one, this entire candle will be my order block, but let us assume we will take on only this one, this portion, right? Now, please remember, guys, you can directly take trade from here also. You can take from here, but it's a risky entry. You don't have the confirmation. You don't have the confirmation. Market is still it can go below. Still it can create like this. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high, lower low. It can create like this. So that is the reason we are not taking entry here. We want to see the shift in market structure. Like this, the shift in market structure we want to see. Okay, we can take an entry from either this order block or maybe this order block. That is what we are expecting. Okay, so here, say I'm marking this one. This one is my order block. Now let's see. It is worked, right? It barely touched my stop loss, but it worked. It still worked. Now you can see here, what should be my target? This was the equal high, right? Now what happens? See here, equal high is taken. Yes or no, guys? You can see equal high is taken. So you touched here, you took your buy entry from the 50% level. Buy entry from the 50% level. I don't know how much is stop loss, how much dollars. I don't know that at all because it's a coin, right? So it given you 1:8. 1:8. This, now you can see here the equal high is taken. Equal high is taken, right? Now what is the manipulation candle? Is this my manipulation candle? But please remember, this is my 5 minutes manipulation candle. So it may not have the more orders. So you have to be really careful. Okay. So now what happened here? Manipulated market, and is it broken the structure? It is now breaking the structure, right? Now which one is my order block? This is my order block, right? So I'll be looking for the price to come here, touch here from the 50% level. From there, I'll be taking sell entry. And please remember, this is 5 minutes order block, so it may not give you the results because our bias is still, what is our bias? Let's go to 1 hour. Our bias is not yet defined, right? We are in a ranging market, right? We're in a ranging market. We don't have the buy bias or sell bias in a 1 hour time frame. We obviously having the sell bias only, but still in this area it is ranging. So you have to really careful about the sell entry. If you have any proper breakup structure in 1 hour, then you can obviously take the sell entry from the 5 minutes order block here. Okay, but since it's a ranging market, so you have to really careful, right? Now is it work perfectly, right? You could have captured this up movement. Okay. Okay, you, Kanchan madam, you have invested, which means you have bought in ETC USD. Okay, sand. What is BNB USD? I don't know those things and all. Sand. There is a coin called sand. Sand USD. Okay. Yeah. Let's take USDT, US dollar, Binance. Let's take this one. Let's go to 1 hour. And again, I told you guys, I don't have direction. I have direction, bearish trend. Longer time frame bias is still bearish. It is going down, right? But in this area, particularly in this area, I don't have the direction, guys, because we are seeing the latest recent one, right? I can say this is my breakup structure, but it is still a liquidity grab, right? And I can also say that it's still bearish trend. So I'm guessing. I'm not 100% sure about this. I'm just guessing. So this is my, what you call, manipulation candle. So since it's a bearish trend, I cannot buy, right? Even though it's a manipulation candle for buying entry, it's given me the buying opportunity here, but it's a what do you call it? It's a bearish market. So you have to take this buy entry very carefully. So 1 hour I marked the manipulation area, or you can entire candle also you can choose, but let's stick with only the wick part because it's high. Now go to 3 minutes or 1 minute, whichever time frame you like. So this is exactly we have marked the manipulation, right? This is exactly manipulation happened. This was my down candle, right? This big candle was my manipulation candle. Okay. Now after that, what happened? Price just touched the area and it broken the structure, right? In a 3 minutes, it broken the structure. Now, is it my order block? Yes or no? Is it my order block, guys? Now you can see here buy entry. You can take the buy entry based on manipulation, but still this market is bearish market. Please note on that. So technically you should exit your position at least to this level, at least to the trend line. So you could have taken your buy entry here. So now the thing is your stop loss, hitting your stop loss is in this strategy very rarely will happen, guys. I can tell you 99% your stop loss will not hit if you are practiced really well and if you are putting the entry in a perfect manner, right? And it's up to you guys. You can practice a strategy in 3 minutes. You can practice a strategy in 5 minutes. You can practice a strategy in 1 minute. My personal preference is I'll be taking only 5 minutes and 3 minutes time frame. My lower time frame is 3 minutes. I'll be looking for the 3 minutes or 5 minutes breakout structures. This is my 3-minute breakup structure. So this is my 3-minute order block. And this is my 3-minute manipulation. So I told you guys, lower time frame manipulation, lower time frame breakup structure, lower time frame order block. This is what we are talking. Okay. So you have to do this, do like this. Clear, guys? Anyone have doubt? Anyone want me to repeat this concept? Please let me know. I'll repeat. No worries. Overall, for taking the trading, we need to follow the same procedure, 3 time frame to take order and reduce the stop loss with high profit. Yes. And I'll give some more information also. Then I'll repeat all those things. Yes, I do trail in Forex market. I do trail this stop losses. Say, for example, if my entry is taken here, so I'll be looking for the price to go at least 100 points above in Forex market. I'm saying, if price goes above 100 points, like 150, 120, like that, in that case, I trail my stop loss to 100th point. Okay, at least I'll be ending up with 100-point profit. So that is the mindset, because in markets anything can happen. Even though you practice all the strategies, there is a chance you may lose also, right? So we should not end up with give up our money. Whatever money we earned, we have to secure that. 100 point itself also profit, right? So we should not leave that. Yesterday someone scored I think 50 points in the group. They have mentioned 50 point. It's also money. It is also money. So instead of leaving that money, we can capture that money, right? So I used to trial my stop losses every single time. Every time I reach the 100 point, I'll trial my stop loss to the 100th point. After it goes 150 or 120, 130 like that. Okay, that is how you need to do. Even though you follow how to trail, it's very simple. MT4, you will be having the buy entry, your stop loss will be right. Stop loss will be here, your buy entry will be here. So price gone here. So just drag the stop loss above the buy order. First thing is you need to drag the stop loss above the buy order. I'll show this tomorrow, guys. Okay, I'll show this tomorrow. because today we'll see one more thing. Now then we'll finish up the session. So how high probable trade setup is simple. You will be combining lower time frame order block, lower time frame breakup structure, lower time frame manipulations also with higher time inside the higher time frame zone. The zone can be breaker block, the zone can be order block, the zone can be supply and demand zone, the zone can be mitigation block, the zone can be imbalance, the zone can be support and resistance, the zone can be any area you think that the zone can be pivot points also. There's an indicator called CPR, right? Anybody heard about the CPR indicator, pivot points, right? So at that level also you can apply this strategy. Right? So the only thing is you'll be looking for the lower time frame like this. You'll be taking higher time frame order block. Inside that you'll be looking for 1 hour order block. Inside that you'll be looking for 15 minutes order block. Inside that you can look for the 5 minutes order block also. Inside that you can look for the 1 minute order block also. But at least you should see 3 time frames: H4, H1, M15, or H1, M15, M5, or M30, or M15, M5, M1. Also you can do that, but I don't suggest that. I suggest that I'll at least stick with H1, M15, and you can go for 3 minutes or 1 minute or 5 minutes lower time frame. Okay, and it doesn't need that you need to look for 3 order blocks. You don't need to look for the 3 order blocks. You can still stick with H1 and M15. You can take entries in M15 also. You don't need to refine further, but it's up to you. It's up to the stop loss also. Okay, now this is how you can see here. This is my bullish order block, H1 bullish order block. Price touched here, but I didn't take the trade. I won't take trades. I'll go to the 5 minute time frame. I'll go to the 5 minute time frame. I'll see the 5 minutes order block here. I see the breakup structure here. And this is my 5 minute rally zone, right? So I mark the 5 minute order block. I take the 50% entry here, right? And my target should be H1 swing high because I'm coming from the H1 order block. So my H1 swing high is my target. This is the last point of mitigation, but you can still exit here also. You can exit here, or maybe you can exit somewhere here. It's up to you. Up to your risk and whatever, how much you are investing also, right? So let me delete this. Now I'll give you one more idea. This thing also, entry types. What are the entry types available? There are 2 entry types available: aggressive entry or risky entry, conservative entry or confirmed entry. Okay. Now what is the difference? Aggressive entries are, as the name suggests, is a aggressive entry. You are taking trade directly at 50% or 100% level of order block. That is called aggressive entry. Okay. Conservative entries, more refined entries in which your stop loss will be lower and you will get sniper entries. Sometimes you may not get entry also. Okay. Sometimes you may not get entry also. Now I'll explain what is aggressive entry, what is conservative entry. Now, if your aggressive entry means nothing but price is coming down and this is my order block, right? This is my order block and price is coming down. If I take entry from here, this is aggressive entry directly. If I take entry from the 50% level, that also it's aggressive entry. Okay, it's a risky entry. You can take that. There is no denying on that, but you don't know whether it is going to work or not, right? So in that case, you should look for order block like this. Price will come here, touch here, and it will create a breakout structure. Okay, so in that case, you'll be having order block here. So if you're entering from this order block, then that considered as a conservative entry or confirmed entry. But if you don't have confidence here, but you can again look for the one more breakout structure. And now you will be having order block here. So this is also called confirmed entry. And your target is here. Okay, so basically you are looking for the lower time frame breakup structure inside your higher time frame order block, and you are looking for the lower time frame order block inside the higher time frame order block. You are looking for the lower time frame manipulation inside the higher time frame order block. Okay, now this entry you can get, most of the times you can get this entry, but sometimes you may not get this entry. You may not get this, you may lose this entry option. Okay, no worries. Markets at some point of time, it will give one more entry here. So you can enter from here. It will give you the opportunity. It will give you the opportunity. So if you are missing this uptrend, no worries. You will always have 6.6 trillion market, right? Every day you are having that. So yeah, this is called aggressive entry and conservative entry. If you are a smart money trader, if you are following the smart money concept, you should follow the conservative entry, guys. You should look for always, you should have the patience. You should look for the conservative entry. You should look for the breakup structure like this, then only you have to take trades. Okay, you should not directly take the entry from the order block. You should look for the confirmation, right? By the way, you can get the sniper entry. At the same time, you can get the high probability setup, but sometimes you may not able to capture. Sometimes you may not able to, you may miss the opportunity. Sometimes what will happen is it will come down like this, it will break, it given you the confirmation, you mark the order block here, but price will go like this, it will not come here. Sometimes you miss the opportunity, but not an end of the world, right? That's why I used to say you are always have tomorrow. When there is no setup, then when there is no setup, then no trade. We always have tomorrow. We always have tomorrow. There is no compulsion that you have to take trade today. There is no compulsion. That's why I'm saying that you should not have the emotional pressure or stress or depression. If you don't get the opportunity today, no worry, you'll get opportunity tomorrow. If you don't get tomorrow, you will get day after tomorrow. Market is still there, right? So you need to capture only the conservative entry. Okay. Now let's see if I have anything more to add. Yeah, I think I don't have anything more to add. So yeah, let's see. Let's explain this once again, guys. I'll explain this once again for every one of you guys. Okay, simple but difficult to master. Okay, but if you master this, you will enjoy every single trade in any market. I can tell you, any market you will be enjoying every single trade. Okay, let's go to different pair. AUD USD. Okay, now I'm sorry, this is stocks. Now just see straight away, you can see. Let's go to 1 hour, or let's go to 30 minutes now, right? 30 minutes. You can try this everywhere, any time frame, but higher time frame is more significant. Now, can you guys see the manipulation here? This is completely manipulation, right? How I'm saying it manipulation, it's equal highs manipulated, and this is my manipulated candle. But this is a very big candle, but still I'm marking because I don't care, because I'm not going to take trades directly. I'll be looking for the confirmation. Now price touched here directly. Now straight away I'll go to 1 minute time frame. I don't know what happened here because I haven't seen this chart. So here you can see it is touched the order block, 30 minutes order block, right? And what happened after that? After touching here, it broke the structure. It broke the lows, right? But if you see here in a 1 minute chart, let's see the back. You can see here, this is also breakout structure, right? Breakout structure. Now, which one is my order block? Now, which one is my manipulation candle? This would be my order block, right? This is my manipulation candle, right? Here it is manipulated the low and gone up, right? So this will be my rally base rally, or it may be my order block. I don't care, right? So what happened? Broken, came back, touched here at 50% level, exactly at 50% level. See the down movement, right? So you missed this. No worries. You see one more breakup structure here. And what is my order block? What is my manipulation candle here? Is this my manipulation candle? What happened here? 1 minute, guys. This is 1 minute, right? Sell entry, and it was struggling a little bit, but after that it went down, right? And here you can see one more time breakup structure, and this is my manipulation candle, right? But here, if you consider this entire one, then it would have got the entry, but no worries. Just stick with the top one. Now see here, it's went a little bit above, but you get the point, right? Sometimes it can go up low also, but it's very rarely happen. If you mark perfectly, it won't be happening. Now see the down movement after that. See the down movement. Strong movement. When it happened, it exactly happened at 6 o'clock New York session, evening. Might be because of the news event, right? So I see breakup structure again, right? I see breakup structure here, right? And this will be my level now. I'm doing this 1 minute chart, guys. Extend this one. Now you see here, it didn't touch, but it went up a little bit. Sometimes it can happen. In that case, what we can do is, you can still see the breakup structure once again, right? And which one is my manipulation candle? This one is my manipulation candle. Sell entry. See the down movement. AUD USD. See the when it happened? It happened around 7:30 evening. It happened around 6 o'clock. You missed this down movement. No worries. 7:30, you got one more opportunity. If you miss this, breakup structure, order block, it is touched here, right? Every single swing point you can able to capture the down movement. Breakup structure, order block, touched, breakup structure, order block, touched, breakup structure, order block, not touched, no worries. But here it is touched, right? Breakup structure, order block, not touched, no worry. Now again you see the breakup structure here, order block here, touched, but it failed. Now it's failed, right? So now this is my manipulation. This is my manipulation. So marking the manipulation. So price will be eventually touching here also. It will be touching because it is not a touch, but it will be eventually touching here also. So simply any time frame you can go, you can see this. Any time frame, any market you can do this, but preferably just select higher time frame like this. Now this is my rally base rally zone. Rally base rally zone. It's broken the structure also. Now I am looking for buying here, right? I'm looking for buying here, but here it has failed. Now how I could have avoided this? How I could have avoided this? Simply After marking this level, price is approaching here, right? So just go to 3 minutes or 5 minutes. Price is approaching here. It touched here, gone up, fell down, it broken the structure. Now I can say that I have breakup structure here. So I'll be buying. From where I'll be buying? This manipulation candle, because this is rally based rally, right? So here my order is failed. So if even though you see here your order is failed, and if you see here, there is an order block. It is reacting from here only, right? So you can by seeing this you could have guessed that market still wanna go down, because it's been going down only. Even though I got one breakout structure, you could have waited for one more breakout structure, right? So that is how you need to plan. But here it is failed. No worries. It is failed. No worries. I'll be considering this as a breaker block, right? In that case, it is touched here. I think it is touched here, right? It is broken and it is touched here. So I could have taken sell entry from here in this middle. So it is how much I lost here. I lost here 53 points. If I'm taking 50% entry, then I'll be losing only 25 points, right? And the next sell movement, I'll be taking that 25 points. I'll be recovering that entire 25 points. I've given me more than 200 points. So yeah, losses also we parked sometime, but you can, if you're losing one trade, the next trade you can able to recover that lose, whatever you lost, and you'll be losing only this much. So that's why I'm saying minimum risk, maximum gain. Okay, so let's see what you guys type. Imbalance also you can take. I'm not see, the thing is you can consider each and everything. If you want a perfect strategy, you can consider each and everything. It is not like I have to take only border blocks. You can consider the imbalances also. Where is the imbalance there? I didn't notice that. Let me see. Let's see one strategy based on imbalance, right? Let's see this in a different chart. Someone said CAD JPY, right? CAD JPY. Let's see the CAD JPY. Let's see if we have any imbalances here. Now I have the imbalance here. Straight away I'm seeing in a 1 hour candle, I'm seeing the imbalance. Right? So now price is up. Price will be touching here. When it is touches here, I'll be looking for the entry option. Okay, that will happen I think Monday only. Let's see if we have any order blocks worked here. Now you can say this is my order block, rally based rally zone. It worked here, right? Now let's say how we could have captured this up movement. Now let's go to 3 minutes. This is the imbalance I marked. Now you can see here the imbalance is touched here, but I want to see price to come inside the imbalance. Only then I can tell that imbalance is filling. Okay, now in this case, imbalance still there, so it has to come. Okay, cool. Let's see here. Now this is kind of choppy, but still, first time it touched here. Right? First time it touched here, and what happened next? It broken the structure. So you will be buying from here, right? Yes or no, guys? You should not buy from here. Why? Because you are seeing the equal lows here. Even though it's a breakup structure, you are seeing the equal low, double bottom, which means your double bottom can be taken, right? Can be taken. So that's what happened here. So I will not buy from here. Even though it's a breakup structure, I will not buy from here, right? Because it's a double bottom. Below that, liquidity is there. Whenever you see the double bottom, double top, double bottom, double tops, In that time, you have to ensure that price will definitely take the liquidity. So you should not trade double bottoms. You should wait for the manipulation to happen. Now here manipulation happened, right? Manipulation happened. But do you see any breakup structure here? This is my high, right? It is not broken. You can argue that I have a broken structure here, but I'm not convincing with this because it's a very strong up movement. It could not able to break the swing point. This was a major swing point here, right? It has to break this one, and you can see here after that it is also created the double top. First touch, second touch, third touch, triple top, right? So I won't be taking entry from here also. This I don't take entry from here also. And third thing is I'll be marking the 50% of level here. This is my 50% of level. So I'll be exactly looking the opportunity from here or here, maybe here, right? Now, do you see here price touched my 50% level, but it did not broke any structure. It broke this structure, but it is not breaking the major highs. This has happened only here. Only here it has happened. So I'll be still considering this as my manipulation candle and waiting for the price to come here. Now price touched here, couple of times it is touched, but third time it is couple of times it touched, but it didn't give me any proper good movement, right? It did not give me any good movement. First time it touched, it given me some 140 points. Second time it touched, it gave me some 140 points, and it was ranging completely. It was ranging. So I'll be really careful. So I after taking this trade, I saw this small up movement, small down movement. So I'll be really careful. So now suddenly what happened? You can see here the bottom. Just see this candle, this manipulation candle. It took the liquidity below these lows, a small point. Can you guys see this? Let me delete this box. Can you guys see this? It was like small point liquidity grab has happened, but in this point and all you cannot minutely watch because you cannot see this accurately. So after that, what happened? Price again created the price did not broke any structure. Only here the breakup structure has happened. This candle has created the breakup structure. Now you can see here one more manipulation here. Now this is your manipulation candle. And after manipulation, it's broke the structure, right? Everyone agree with me? It broke the highs of these equal highs is broken. After the next candle, touched my manipulation candle. Swing point strategy. Anybody remember swing point strategy? This is my swing point, right? Price touched here. Buy. Right? So this is how you can take the trades. You can take the trades. Yes. Now the thing is, just remember, guys, if I am taking entry here, I'll be trail my stop loss only if price goes above 100 points. So my stop loss will be here, right? My stop loss will be the bottom one. So I'll be looking for the 100-point movement first. Okay. So I'll be taking entry here, 100-point movement first. So as soon as I reach 100 points here, I will be trail my stop loss. Say for example, this is my stop loss. I'll be trail my stop loss to break even first. I'll be placing here only. I will not place here. And I'll be waiting for another 200 points. If it goes 200 points, then I'll be moving my stop loss to 100 points. Okay. So in that case, I won't be missing this $100 profit or $10 profit in a mini if you are trading in a mini lot, right? So if it goes further like 300 points, in that case, I'll be moving to 200 point. My stop loss will be over. In that case, might be my stop loss might hit by this down movement. I'm happy because I made 200 points. Okay. So like that do. And imbalance, like I said, imbalancing is also you can consider. I haven't considered because I don't need to do that every single time. I don't need to do it because see, the thing is imbalance is important, but the most important thing is the lower time frame breakout structures. The order blocks, it doesn't matter, guys. It doesn't matter. You can still use swing points. You can use support and resistance level. Let me share you guys. I don't know about the support. I properly don't know how to draw the support and resistance lines. Let's take GBP, JPY. Okay, you don't need to worry about support any zones, right? For example, this is yesterday's marking. So let's see if we have any support and resistance line. Let's see 4 hour. So now let's see this. This is my support line, resistance line, right? Right, resistance line. In this area, it was resistance, right? Price touched here, fell down, and price touched here, fell down, right? This is my resistance zone, right? In this case, when price approaches here, you just go to 5 minutes. Here exactly price is approaching, right? So here exactly you have marked your resistance, right? Here exactly price is touching your resistance line. So I'm not using smart money concepts. I'm not using supply and demand source. I'm just taken the resistance line. Okay, resistance and support line. Right now, price is touching my resistance line first time, right? And I'm going to use only the breakup structures. Now, as soon as it's touched, I saw the breakup structure here, right? I saw the breakup structure, and I can say I have seen the breakup structure here also. This is also my breakup structure. Now, what is break and retest strategy? Anyone know? Break and retest. That is how support and resistance status trade, right? That's how support and resistance status trade. Now they'll be drawing the lines, support line and resistance line, and they'll be waiting for the price to. If price breaks the resistance, it becomes support, right? When price comes back, they'll be buying from here. Correct? That is a break and retest strategy. The same logic you can apply here with market structure. You will be comparing here market structure. Now let's take any one of the break and retest here, or let's take this is my resistance line, right? Agree with me, guys? Let's take 1 hour time frame, higher time frame resistance line. I don't find proper resistance and support line. Maybe this one. This one might be my support, right? This is my support, right? First touch, second touch, third touch, right? Support. I'm not using smart money concept. What I'm going to use here is when price touch this support line, what I'll be looking for is break of structure. Go to 5 minutes. Go to 5 minutes. Price touched here, right? And after that, what I'll be looking for? Break of structure. When its break of structure happened? Here break of structure happened, right? Now, when resistance breaks, it becomes support, right? Can you take buy entry from here? Yes. Because there's a broke of structure, the resistance is broken. This is also 5 minute support, right? 5 minute resistance line. This was 1 hour resistance line. This is 5 minutes resistance line. And you can also say that this is my 5 minutes resistance, right? This is 5 minutes support. It become resistance now. And again, it is broken now. You can take buy entry from here, or you can take sell entry from here. My support is tested, and after that I saw the break of structure. So my support is tested, and after that, I saw the breakup structure to upside, which means price will be going up, right? Price will be going up. Then I'll be buying from where I'll be buying from my 5 minutes support line. So I'll be buying from here. So it doesn't matter you are using smart money concept or not. Market structures work with every single strategy. So you can buy from here. Yes, sometimes it may fail also, but I'm telling you guys that it also works with support and resistance, right? But you need to fine tune that. Okay. For example, let's add indicator. Let's add some indicator. RSI 14 period, right? I'm not sure. Relative strength index, 14 period RSI. Okay. So I don't know how this indicator works. I'll removing this Bollinger Band and all everything. I'm just using only RSI, pure RSI, and 50. I think the line 50 line will be the right. I don't know how to do that. Okay, let it be. Let it be. We'll be adding some overbought oversold line. I'm not sure how to do that. Inputs, right? Inputs. I'm sorry, guys. I don't know that how to do that. I don't know how to do that. If anyone tell me. Overbought is 70, but how do I do that? How do I do that in the indicators? The line will be there, no, right? There will be a line. How do I add the lines? Style, okay. Style, okay, upper band. Oh, sorry. Yeah. I'm sorry. Upper band and middle band and lower band, right? We'll be using these 3 lines. And guys, don't ask me how to do this, how to use this indicator, because I don't know. Okay, I don't know. I don't know that at all, because I don't use these indicators. Let me change the colors, the black. You can do your own research on these indicators. See, whatever the indicators I'm going to teach you guys, you can do your own research on this, because I don't use indicators. So let this line to be green and a bit dark. Okay. So yeah, now I'll be buying at when price touches the overbought, right? Oversold here. The bottom is oversold, right? If I'm not wrong, I think it's here. It's oversold. Now I can see here, right? I guess that is correct. Yes. Okay. Thank you for that. So I'll be buying from here. Now I can see what I'm seeing here as swing point, right? A swing point. Swing point. Just mark the swing point. Extend this box. Just go to lower time frame. Let's see this in a 15 minutes time frame. Then we'll go to lower time frame. Let's see this in a 1 hour time frame first, because I think 1 hour, 4 hour time frames, these indicators works really well, right? Higher time frame, it works really well. So I'm seeing here the overbought area, oversold area, right? This area, exactly at this area. This area saying that I'm in a oversold area. From here onwards, it's saying. I don't know how to refine this, but exactly at this area, I got the swing point manipulation candle. This was my manipulation candle, right? So let me go to 5 minutes. And now I don't see RSI. I'll see only the manipulation candle. My RSI is given me the sell signal here, right? And I also got the manipulation candle. This was my manipulation candle, right? Maybe these twos are manipulation candle. I'm not sure which one is my manipulation candle. Okay. Now I need to see the breakup structure. Where I'm seeing the breakup structure, I don't see any breakup structure here. But I'm seeing one here. It happened exactly this area. This area it happened. Now, if it is structure is broken here, right? This would be my resistance, right? Resistance and support, right? Just extend this box. Okay, it didn't come back, no worries. Let's see some different example. Let's see some different example. I'm sorry, really, I'm bad about this indicator thing. Okay, let's go 15 minutes itself directly. We'll see some overbought. Let's see different pair. Maybe USD Chef. Okay. You can see here. I have the overbought, oversold area, and here after touching this oversold area, price is going up, right? I can see the breakup structure here, right? Breakup structure. Now price broken the structure, but it didn't retrace, but it did not retrace. It was still going up. No worries. Again, you see the breakup structure where you are saying here exactly. And now it is, you can say that it's broken and retested, right? So based on that, you can take trades based on the tech. But I don't know how, where you will be putting stop loss and stop loss and all, because I never traded the support and resistance, right? So you can combine support and resistance indicator with the breakup structure. Market structure is the key. Based on that, you can do. And every time your indicator gives signal, buy sell signal, and just look for the breakup structure and take trade immediately. Even you can take trade immediately here also, because you see the breakup structure. You can look for the retest here, but you can still take the trade immediately as soon as you see the breakup structure, right? Because you are combining the price action with the indicator, right? So but it need more refining, more fine tuning. Since I'm not familiar with this support and resistance, I cannot guide you on this. You can do your own research on this. Okay. Yeah, RSI divergence people use. Yes. I know that people they will be using the divergence like this, right? Like this. They'll be seeing here they'll be seeing the right like this. Something like this also they'll be seeing. Yeah. I have used this. I have used this long time ago. Okay. At bottom. Okay. Okay. The liquidity thing is okay. Let's shall we do you guys want to speak with me, or you want me to explain anything else? Anything you wanna learn? Anything I wanna repeat? Anyone want to speak with me? Kadir, sir, I think I can unmute you.
Hi, sir.
Hi, sir.
Actually, I have used the same strategy by yesterday, and I have marked this base just a minute. Yeah, can you please see the WhatsApp group, sir? I have shared you for image.
Chart. Okay. Let me.
I think that is New Zealand USD.
Okay, let me see. Okay. Let me see. This one you are saying, right?
Yes, sir.
Okay. What you marked here? You have marked the manipulation candle, right? Manipulation candle you have marked, and you saw the breakup structure. Manipulation is not touched here, and you marked the imbalance here, and you marked the manipulation here.
What more manipulation is?
Right. So this is your manipulation, and this is your manipulation candle, and this is your imbalance zone also.
Yes.
You are having.
So I'm expecting the market will come down and it will fulfill the imbalance, and also it may come and touch the manipulation too.
Especially you have the bullish breakout here. right?
Yes.
So you can look at this area, buying opportunity, this including this imbalance. Don't consider the imbalance. The thing is, sometimes price fill the imbalance and go up and again go down. So
Yeah.
so it is better to mark this manipulation candle. Okay, manipulation candle is key thing. So what you'll be doing is simple, as we discussed so far. So we're looking for like this, something like this, something like this, and touch your imbalance, touch your manipulation, and you'll be seeing some breakout structure like this. Okay, this is the first breakout structure. Let me draw clearly. So you'll be seeing the first breakup structure like this, right? You can mark your order block here. You can take entry from here, but this sometimes fail also. So look for one more breakup structure, right? And take entry from here. And your target should be this one. Okay, this is a secondary confirmation, but if you are still confident with this, you can take this also. But
sometimes it won't come back, right?
Which one?
That your secondary confirmation.
Sometimes
Sometimes.
it may not come. You may not get the secondary confirmation, but as soon as you see the first confirmation, you can take the entry, right? So yeah, especially in a bullish market. So you need to ensure that it's a bullish market, and you need to ensure this is a manipulation, higher time frame manipulation, like 1 hour or 4-hour manipulation. So in that case, yes, you can take entry from the first instance itself. But I can tell you one thing: some people are taking third confirmation also. They'll be using third confirmation also. Sometimes they used to get that also. So yes,
there will be getting a chance of entry will be less, right?
yes, you'll be losing some points, and chances also low, and your target also limited. That is the one minus in that. But this one, the first one and second one also, you will get at some point of time. You will definitely get the second one. Most of the time, at least I can say 90% of the times you will be getting the secondary test also. Third test, I cannot guarantee. I cannot guarantee the third test.
Actually, here I have placed the 3 orders.
Okay.
One market order and 2 is limit order. The market order is I just got a sell order where the market exactly plays right now. That's the chop market, right?
Okay, here you have taken sell order.
No, not that. Exact live position, yeah.
Okay.
Because I have seen the imbalance and as well as the mitigation, right?
Right. Yeah.
Sell entry as a market price, and I have replaced 2 limit price. One in imbalance zone and another one is in mitigation zone.
And you need to watchful about this. There's a breakup structure here.
Yes.
And this is also order block. And above this, you have the liquidity. Right? This is kind of ranging right now. It is kind of ranging. So there is a chance like that you can go. So it can mitigate this also, because especially these 3 candles are big candles.
Yeah.
Okay. So yeah, it may also happen, but yeah, because today's market closed. When market opens in the Asian session, it will be like crazy. It will create crazy movements. So we got to really careful. You can go like this. It can come down also, right? So we are not sure about how this particular, because New Zealand is open. So New Zealand market will open by like around 4:30 in the early morning. 3:30 in the early morning. So as soon as it opens, it may give some volatility and it may go up, go down. Okay, so that's why trading on early morning of Monday is not advisable. Trading in a London session in a Monday is good. So be careful with that.
Okay. There are only 3 sessions, right, sir? London and Asian and
yes.
New York.
Yes, in my personal opinion, London, New York are most profitable sessions, and it will give you the more opportunities to enter the market. Asian sessions are kind of choppy sometimes, slow, and only Mondays are it is fast, but rest of the days it was mostly slow. Okay, So it's better to avoid trading till 11 o'clock, from early morning to 11 o'clock.
Okay. Okay.
Okay. Yeah.
Thank you.
Thank you. So let me see, guys, if you have any doubts. I used 200 period EMA. Sometimes I use 200 period EMA, and I use the QQ indicator sometimes, not regularly. Yeah, I have tried different indicators. Like I used Fibonacci retracement. It's not an indicator; it's a tool, and I used the volume profile. So Forex don't have the volume. I don't. I use the volume profile. Okay. Yeah. So we will be teaching that tomorrow. Tomorrow's session is not that much important, but still it will be having some information. Let me see if you have any doubts, then I'll clarify, or else we'll revise whatever we learned so far. Moishari, I know that it is a little bit blank. Yeah, but just watch, as I used to tell you guys, just watch the video every single twice, thrice. Okay, try to grasp this. Once you grasp this, you can able to do wonders in your trading. Okay, so anyone want to speak with me, or shall we revise everything? So I know it's okay. Okay, I'll revise this. Okay. The thing is, let me revise in the chart what we learned yesterday and what we learned today. Okay, let me close this. Go back. Okay. So what we learned so far yesterday is we learned about the liquidity. Forget about imbalance. Imbalance is concept which you guys already knows, which is not required for now. Okay. Yesterday the key thing we learned yesterday is the liquidity. Right? Where is liquidity is there? Liquidity is there in every single candle. Bottom of the every single candle, top of the every single candle. Bottom of the every single candle, top of the every single candle. Every single candle's highs and lows has the liquidity. Okay. Market is every single time market is approaching the liquidity. It is approaching the liquidity. It is approaching the liquidity. It is approaching the liquidity. And once its liquidity is exhausted upside, it will approach the liquidity to the downside. It will approach the liquidity to the downside. Downside. Okay. This is what we are calling as uptrend, downtrend, ranging market, like that, right? Now, our key strategy is simple. We will be always look for the liquidity grabbing candle or the stop hunting candle or fake outs, or you can call that as a manipulation candle. So manipulation candle will generally occurs like when you have the ranging market. When you have the ranging market like this, we can say that we don't have the direction because it's a ranging market. It's going up, going down, going up, going down, right? We don't have the direction. When you see this ranging market, you will be having the equal highs and equal lows, or you can call this as a triple top, triple bottom, double top, bottom, like that. You can call this as any names, but I call this as a equal highs and equal lows. When you see this, there is a two option available here. What will happen is price will fake out or create a fake candle here, manipulation candle here, and take the liquidity above and it go other way, right? Other way, and it will take the liquidity below also, and it can go like this. You can break the structure, right? In that case, manipulation happened in upside, manipulation happened in downside also, right? But the intended direction was this manipulation was uptrend. That's why they have taken this first and taken this second, and they broke the structure. Now, this is my valid order block. This is my valid order block. Now, what I will be expecting here is, I'll be expecting price to come here, touch here. From there, it again broke the structure. I can take my buy entry here, or I can wait further, little more time. I can take my buy entry from this order block, because again it's a break-up structure, right? I can buy from this order block. This is what we have learned yesterday. Okay, this is a one method. The second method is the same liquidity grabbing. Sorry. Okay. Same ranging market. Just imagine the same ranging market, right? Equal highs, equal lows. Now, what can happen is price broke my lows, take the liquidity, and it can go like this. Okay, like this, but eventually price will come down, touch here, and again go up. Okay, one side liquidity grab can happen. One side liquidity grab, and it can go up. Okay, these are the two options available in the market in terms of ranging market. In terms of ranging market, sometimes there will be only one candle. Okay, this candle was, the next candle was a bearish candle, which means you take the liquidity, right? And next candle was strong bullish candle. Okay, now it's broke the structure. Here it is taken the liquidity, and now you can say here how it is taken the liquidity, like there will be a wick, right? This is the candle body, and you will be having the wick, and you are having the wick here also, small wick. Okay, now you can say this is my manipulation. Okay, now in this case, this is your order block or manipulation candle. So now price will come back, touch your order block. Okay, from there it will again go up strongly. Okay, so this also sometimes will happen. This happens when you mark the H4, still H4 you can consider. I don't consider the H1. Sometimes it may not give the proper signal. Okay, whenever the daily candle lows taken, you can consider. Whenever the weekly candles lows taken, you can consider. Whenever the H4 candles lows taken, you can take this interest. But stick with daily, weekly, monthly. So don't even sometimes H4 even also not work. Okay. So either you can look for this or either you can look for this. This is what we have learned yesterday. Now, what we learned today is how do I take entry from here? How do I take entry from here? How do I take entry from here? Inside my order block, inside my order block. This is my 1 hour order block or H4 order block. And or you can say this is my rally base rally zone, whatever it can be. So rally, a base, small base, a rally, right? This is my bullish order block. Now, inside this order block, I'll be marking inside this order block, I'll mark only manipulation. Now you can see here, there is a manipulation here. Right? So this is my manipulation candle. I'll be marking the manipulation candle as an order block. And I'll also have some imbalances, maybe inside and upside also, some imbalances here. Okay. Here or maybe here also, some I'll be having imbalances. It doesn't matter, right? Now, let me delete this. I don't want this. Now, what I'll be doing is this is my H4, H1 or H4 are daily. Now, what I'll be doing is I'll be looking for the price to come down in a 15 minutes or 5 minutes time frame like this. When this happened, when I see this breakout structure, I know that market is going down, right? So I'll be marking my supply zone or bearish order block here in a 15 minutes, and I will be looking for the price to go here. It touch here, right? As soon as it's touch here, I'll be looking for 5 minutes breakout structure. 5 minutes breakout structure. This is my 5 minutes breakout structure. Okay. And this is my 5 minutes order block. Okay. From here, I'll be taking my sell entry. Sell entry and price will go down. Okay. I captured my sell position. I took my sell position. Right. Now, inside this, I'll be again looking for the 5 minutes breakout structure. 5 minutes breakout structure happened. Right. So I'll be marking order block. And I'll be taking my buy entry from here, or maybe, and I'll be targeting above these highs, because this is now last point of mitigation. I'll be buying from either from here, or maybe I'll be having one more order block here, or maybe one more order block from here. And I'm seeing the breakout structures. I'm seeing the breakout structures. So I'll be taking, right? So again, because of the liquidity grab happened here, this zone is valid. Because of there is a liquidity here, I'm targeting here. Because our market approach is liquidity seeking approach, right? Now, after taking this liquidity, what will be doing here? Again, this will be repeating, guys. Again, this will be repeating. Right? So now this time I'll be having the mitigation block here. Or maybe I can say this is the manipulation candle. Right? And again, price will go up like this, right? And I'll be having one more order block here, or rally based rally. I'll be taking sell entry from here. And now, what is my target? This lows are my target, and price will definitely do this down movement take here. Again, this is happen. This will happen. So this is what in market. This is what happening. Now it may look confusing for you guys, but if you learn this, I can tell you that you can become the market maker. You are a market maker if you learn it, because price is seeking for the liquidity, price is seeking for the orders. So when you observe this in a higher time frame and lower time frame, you can able to take wonderful opportunities every single time. Okay, clear guys? Everyone clear?
Sorry to interrupt in between, sir, but I think it's already been quite late. It's 11 now. So what we can do is, because actually I was getting some responses from students that it's been 4 hours since the class started.
Okay.
So if our concepts have been covered, if all the concepts for today have been covered, we can do one thing. Any doubts, if there are doubts of the students, we can like have 20-minute doubt session at the starting of the class, tomorrow's class.
Okay. Sure.
Because it's already 11. So so I was actually getting responses from students only.
Okay.
Some students said that it's quite late. So yeah. So in case guys, anyone has any doubt, you can ask tomorrow. You can like join tomorrow 20 minutes prior, and you can ask all your doubts at that time.
Okay. Yeah. So I think you can watch this video tomorrow morning. You can get the logic, right? So you can ask me the doubt. Okay, guys.
So I think, sir, we can end the session for today. And guys, I'll share the feedback form in the group only. And in case you have any doubt, you can post it out in group, WhatsApp group, or you can just ask tomorrow by joining 20 minutes before the session starts. So thank you everyone for joining, and thanks a lot, Muthukannan, sir.
Thank you, Akshat. Thank you guys. Thank you for being patient for this much time. And we'll see tomorrow. Tomorrow we'll